TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Two very big interviews coming up next couple of days. Former NEC Director Gary Cohn is going to sit down with Arsima Modi later today on Fast Money. And then tomorrow, Goldman's Senior Chairman and former CEO Lloyd Blankfein will be live on the Halftime Report. Comes on the heels of a tweet from Lloyd the other day about Elizabeth Warren. And, of course, lots of questions to ask Gary Cohn regarding tariffs and trade. As for what's going to pull us away from the flat line, hard to say. There's been plenty of news. Let's get to the judge.
Carl, thanks. I'm Scott Wapner, front and center this hour. The stock surge, how far this record rally can really go, as even some of Wall Street's most notorious naysayers get more optimistic. It is 12 noon. This is the Halftime Report.
28,000 and beyond. How much higher can this record-breaking rally go? And are stocks still cheap enough to buy? The undisrupted champions of Wall Street. 4 stocks outperforming this market and are driving this historic run. A big week for retail earnings. Home Depot, Target, Macy's, and more. The #1 retail analyst on the street gives us his best ideas. The investment committee is ready to go. Halftime Report starts right now.
And it is good to have you with us on this Monday. Our investment committee here at the table today: Joe Terranova, Jim Lebenthal, Josh Brown, Steve Weiss, and Shannon Sakosha, the Chief Investment Officer at Boston Private Wealth. Let's kick it off with stocks. Record highs for the major averages. Volatility, the lowest since the summer. The question now, does it clear the decks for a major move higher by the end of the year? Josh Brown, that question to you first.
Hey, Judge, how's it going?
How are you, man?
Here's the big picture. Take the S&P and the Dow out of it. Just look at the All-Country World Index. The ETF for that is ACWX. That's global stocks without the United States in it. Or, if you prefer, take a look at the EFA Index, which is the rest of the world developed. The ETF for that is EFA. They're both hanging at new highs, and that is something that not a lot of people expected going into this year. There was this conversation about how the trade war would be damaging to Europe and Brexit would be damaging to Britain. What if I told you German stock market's up 25% year to date, and Japan's up 17%, and the United Kingdom's up 28%? You probably wouldn't have expected those things to be happening. And I think that backdrop is important when we think about U.S. stocks, because one of the big problems that we've had in prior years is that lack of follow-through from stocks around the world, and people complaining, oh, it's just 10 stocks driving everything. Well, now you got both. 3 out of the 4 most important stocks to the U.S. markets, Microsoft, Google, and Apple, all made new all-time record highs this morning, along with the rest of the world. So with that as your backdrop, you're free to think that you're smarter than everyone else on Earth. That's fine if you want to. Or you can say the breakout is for real, another new leg higher for the bull market.
Okay, so Joe, as I said at the top, even the most notorious quote-unquote bears are getting more positive. None more than Mike Wilson, Morgan Stanley, the man who sat right where Steve Weiss is. Large case called a lot of this correctly, even though missed some of the upside since then. He raises his S&P 500 targets by 10% for year-end 2019. Now, he was below many others, so he's coming up to speed, and in some cases exceeding that. His bull case is 3,250. His base case is now 3,000, but let's focus on 3,250. Quote, our call on the S&P's level has been too cautious as we underestimated similar dynamics like central bank easing, sticky out-year earnings estimates, and flight to safety flows into the S&P from international investors and asset allocators. Mentions year-end performance chase, mentions a trade deal as being another catalyst. So Wilson's come around. That's the final straw to drop. We're going higher between now and the end of the year. How much do you think we have in the tank here?
So we are in the process of going higher, and the good formula for that has been this continued rotation it seems as though at one moment value takes the baton and leads the market higher, financials and energy. I think in the last week something important happened. We went back where growth names have taken the baton once again and are leading the market higher. Even some of the bond proxies that we felt should be reduced in terms of allocation, last 5 days they're coming back once again. So we continue to have this legging process from one strategy in the market to another that is climbing the stairs higher and higher to the end of the year. 3250 on Mike's upside, that's only 4.5% higher from here. I think.
But you do that between now and the end of the year?
I think
that's a lot.
That is a lot, and I think that's a little bit aggressive. But I do think into January, you're going to see the positive momentum that we've developed here in Q4 continue. So you could skate into February and get your 4.5%. Where we go from there, I'm not necessarily sure.
So, Shannon, the question is this what the so-called blow-off top starts to look and feel like, okay? You got stocks up 2% over the last 2 weeks. If you get 4% between now and the end of the year, you've got stocks rising even as the economy, pretty good. Forecasts for the fourth quarter are coming way down, though. Some are just downright ugly, okay? Now you got the bears turning bullish, and you've got even some of the bulls turning even more bullish. Sign of a worry or no?
I think if you're, as Mike Wilson pointed out in his report, if you're an asset allocator, the last thing you want to be doing is taking equities off the table right now. You want to move into the year end with as strong an equity position as you can possibly have, show that you've been there, you've already been there the whole time. I think the concern that I see is that if you look at it in terms of some of the economic data that's come out, like Friday's retail sales report, top line, pretty attractive. Underneath, the data wasn't as strong as we would have liked to have seen, and we can see that as we go through the holiday season. I think the biggest challenge that we have now is where do you go next? Bonds remain unattractive. As Josh pointed out, if you really are expecting to see a rotation from value to growth, you should also be seeing a rotation from the U.S. to international because the divergence is just as wide, if not wider, between those two. And so I think we could get some support. But I look at 2020, and I look at what's coming up in the first quarter, and I look at a lack of trade resolution because I don't think we're going to have a resolution with China. I look at an upcoming election. I look at concerns about where the Fed actually sits as it relates to data dependency. And it feels a lot more like January 2016 to me, where I feel a bit anxious than, feeling as bullish as some of these reports are.
Okay, why? So Shannon's looking to 2020. Golub over at Credit Suisse, Jonathan Golub, he's looking to 2020 also.
I'm looking at 2021.
Oh, you're ahead of the curve.
Feel me?
I got you. 34.25 by the year, and you're looking at 10% for Golub. S&P 500. Now this is the network saying this. S&P 500 is up nearly 25%. History shows the momentum could carry over to next year. We looked at the data. Okay, going back to 1928, there have been 17 occasions where the S&P has scored an annual gain of at least 25%. Right? You with me?
Yes.
Josh, you still with me?
I'm following you.
I know you've jumped ahead to 21, but you're with me?
I'm in 22.
Okay. 71% of the time, the S&P is positive the following year, average gain of 7%.
So I did look at the numbers. I went all the way back to see what the gains could be in the market.
You went all the way back to 28?
I went all the way back to, I didn't go back to 2020 because that's forward, but I went back since the market began and looked at these
Get on my level.
Yeah, exactly. And sure, the market can go up, but I also don't think that tells us anything. Here's how I'm looking at it. Seasonally, the markets can go higher. I can't tell you if it's 5% or 10% or 4.5%. Market's going higher seasonally. The main, pebble in the shoe could be China negotiation. Now we had some good reporting from China today about the Chinese maybe waiting. In my view, that's just they're negotiating openly. And the market didn't take anything from that.
Would you get worried if we went up by say 4% over the next 6 weeks?
No, not at all. Because seasonally you can have that. I would not be worried. Here's my only real concern about the market. I do think that we'll get phase one resolution. I also am not as worried about it because now that's become the base case in terms of how we're looking at earnings going forward. We saw by this year, market's not really caring that much about earnings. It's caring where capital go. So my biggest concern is, and it's not a concern yet, as we get into 2020, is the election. And what candidates are going to come through? Is it really going to be Warren, which is a real risk to the market? That's my concern. So for right now, markets go up almost all the time, 85% of the time. I'm not going to worry about that 15% without what I see as a real definable risk. absent trade, which I can't handicap, although I believe it'll happen.
Is a risk in and of itself, is a risk in and of itself, though, Jim, too much euphoria or a good feeling if you do have a 4+% move over the next 5-6 weeks? Do we start to, have the conversation about final phase, blow off top, euphoria, worry?
Let's have that first is how I feel about it. Yes, I mean, there is a risk of too much euphoria, but there always has to be a catalyst to knock things down. Right now, the path of resistance is clearly that we move higher, the path of least resistance, rather. The only thing that worries me, Steve just mentioned this, that he's expecting phase one to be signed. I'm expecting phase one to be signed. Most market participants are expecting phase one to be signed. So what do I worry about? I worry about, Scott, we get to December 15th and those tariffs roll into effect because for whatever reason, it doesn't get done. That's an ugly look. That's an ugly look. I'm not selling a thing. I'm fully invested because...
You really think... See, I just can't believe... I can't believe that the administration is going to do that ahead of the holidays. I just can't believe it.
That they would
that the
mess up
would
the deal.
Stay in place.
Yeah, I agree.
Really?
So you're saying... No, you're saying exactly what I've been saying
everything you've seen for 3 years?
This is a rational... You're expecting the rational outcome. I'm expecting the rational outcome.
Because the president needs the economy and the market more than ever.
But you don't know
what Josh is saying is that
then they wouldn't have done this nonsense to begin with.
You don't know what you see. That's my discovery is that I don't know what he's thinking. Is he thinking I've got to take a much harder line on China because that's what my constituency wants? I don't know. It's not rational.
Tell me who he gets off the elevator with last. Does he have his last conversation before sending the tweet with the hardliners in his trade delegation, or does he have his last conversation with somebody who's a little bit more dovish and wants there to be a quieter negotiation? That'll tell you what the next
my personal
shoe to
opinion
drop
is. He can't risk the narrative that comes with the holiday season being a dud. Having the market take a
yes, he can because he's already preemptively put the card up his sleeve. It's the Powell card. He can risk anything because all he has to do if there's a downturn and Christmas sales disappoint, all he has to do is put it on the Fed. It doesn't matter. 40% of the country goes along with whatever he says.
Do you really have confidence that he can rationally go through the pros and cons of it?
Come on, I mean, I think
I'm asking a serious question.
I do. I think he understands what will happen. What will happen if the tariffs stay in place in the middle of December, and if the stock market has a big decline as a result of that
I'm not disagreeing,
policy,
but just to correct what Jim said about me, I don't need to see a deal signed. All I need to see is the positive momentum continue, and that may in fact push off the tariffs on December 15th.
The question is, though, if you have this run, okay, into the end of the year, right? The market obviously feels like it wants to go higher, okay? Just based on what it's been doing lately. A rocket scientist doesn't have to tell you that. Is it time to question, though, valuation where we are? Peter Bookvar talks about a valuation gut check, says with the rally to new highs in the S&P, the price-to-sales ratio is now exactly where it was in early 2000.
So he's looking at an average. He's not looking at median. I love Peter Bookvar, but if you actually look at median, you get a much less intense number, and a lot of that is being driven by gigantic companies on the NASDAQ and technology companies. I don't think that the median level of stock market valuation is very different from the experience we've had in the post-crisis period.
It's fair, but sorry, Joe. If we continue to move up, though, you're going to hear valuation.
You've heard it the whole way. You've heard it for 11 years. What's the difference?
You're not going to sell on that. First off, I'm sorry, go ahead, Joe.
No, Joe, you go ahead.
We've had multiple expansion in 2019. We've had no earnings growth. So you're going to get maybe 4 to 5% in terms of earnings growth in 2020. I think it is fair to look at valuation. I think that's one of the reasons why within the market, what's going on right now, and to Shannon's point before on bonds, I somewhat disagree on that. When you look at asset performance in 2019, all asset classes are higher. Now you walk into 2020 and you say to yourself, okay, which particular asset class do I want to be in? What's going on in the equity market right now is there seems to be money that's flowing to strategies and sectors within the market and pivoting back and forth. And I think the money is not coming out of other asset classes. The uncertainty that we have in 2020, I think it's the same type of environment. Are you really going to get out of bonds going into 2020, given the muted economic growth and a lot of the absence of clarity we have surrounding elections? No, you're going to hold on to those other asset classes. So it's going to go back to equities, and having a valuation conversation is reasonable because there's going to be moments where valuations are going to get lifted in certain strategies and sectors in the market. And when that happens, you're going to have to quickly and tactically pivot into other areas of the market to look at valuations that are lessened. I think we're experiencing that right now in healthcare.
Let me play off that. Because there's another point of view from Morgan Stanley, from Andrew Sheets as well, who says the ROW, rest of the world, is going to outperform the U.S.
I hope so.
next year.
I'm overweight the rest of the world, so that would be great, but it hasn't happened yet for a very long time, and those stocks have been cheaper than U.S. stocks for a very long time. So you can grow old and gray waiting for mean reversion, or you can recognize that in any given year it's hard to determine which will happen, and you can own both. I don't know a lot of investors who are making a one or the other bet. If you talk to 100 investors on the street that know what it's in their portfolio, probably 90 to 95 of them will tell you they're long both international and U.S. stocks, which I think is orthodox. It's not outrageous.
I think in the Wilson note, I think I actually disagreed with him a little bit in that he said that the flows that were fueling the S&P 500's rise this year have been flows out of international emerging markets. I actually think that happened a long time ago. I actually just don't think there's been any investor interest. So to Josh's point, though, in order for international developed and emerging markets to outperform, we need to continue to see momentum in the U.S. stock market. If the U.S. stock market pulls back and we get cautious, that's going to drive money, to Joe's point, back to insulating asset classes like bonds, not outside of the United States.
Two things.
And valuation doesn't matter in that case.
There's two things that I think are important to point out. There's the first thing is that I think the valuation question is being resolved on a security by security basis. We are curb stomping stories like Uber and 20 other companies that have come public in the last 18 months that I could reel off. We are individually beating them up when they disappoint. So you get to be overvalued until you upset your investors, and then you don't get to be anymore. That doesn't necessarily have a market-wide impact because you see those types of beatings take place in the context of a green tape. That's one. But two, this whole rotation into value story, throw up a chart of MTUM. This is the ETF that tracks the momentum stocks in the S&P 500. We're right back at new record highs. This thing is going up again. So I think there's an argument to be made that there are overvalued stocks. But again, if you look at the median valuation in the Russell 1000, it's just not as extreme as some people would paint the picture. And individual expensive stocks are being punished when they disappoint.
A couple of things we haven't talked about why this market rallies into year end. Number one, performance chasing. All right. Anybody who's had cash on the sidelines this year as a professional money manager has to get back in the game. They just don't have a choice.
Mike Wilson's catalyst.
That's every year, though.
Well, no, if you got a down year, then sitting on the sidelines like last year is actually a good idea. But the second thing is, look, not all the world is taxable investors, but enough of the world is taxable investors that anyone looking at a major gainer at this time of year is not thinking about selling it right now. They're sort of crossing their fingers and saying, can I get to Jan 1? And you know what? It's easy to do when the market's rallying like this. The absence of those sellers should not be underestimated.
Should you still buy cyclical stocks in 2020? Should you play the value stocks over growth? I mean, I know what Josh said. It's not like growth has done terrible.
Yeah, no,
but there is a view now, which is becoming fairly widespread, that value is going to continue to outperform, or at least perform well.
I think selectively in a stock-by-stock name, you could do it, but I don't see the major growth coming back, at least early next year, that's going to justify these stocks outperforming growth stocks.
But then why have they outperformed, though?
On the belief of phase one. It's simply on the belief of phase one. Look, I'm in this space, so I know, all right? Every time that the rhetoric, like the last week, the rhetoric has gotten a little bit sour on whether tariffs are going to be rolled back in phase one. And guess what? Last week, as Joe, you pointed out, growth outperformed value. You know, you're looking at these cyclicals, these industrials.
I disagree with you. I think it's the backup in yields. The backup in yields from 144 to nearly 2% is the reason that you got the lift. We showed before emerging markets, Japan, Europe. Do you want to buy those in 2020? Add to the list financials.
Yeah,
because if you want to buy those, it's because the 10-year Treasury is going to go above 2%, so you might as well buy financials.
Look, I've said this before, that one of the reasons the market's moved higher, the equity market and value stocks have moved higher, is because people are reading through the steepening of the yield curve to a better global economy. And it's not only in the U.S. I mean, you see bunds have a nice sell-off and a recovery in rates going near zero, not there yet. So that's why cyclicals have moved up. My view is that I don't see that following through in terms of the fundamentals in the early part of next year. Plus, it was a rotation. Some money came into the market, and some said, hey, growth's done very well. Where can I go where there's stocks that have lagged? So you went to cyclicals, went industrials.
Okay, let's do this. Wide shot, show of hands, okay, on the desk. Sectors to be in 2020. Financials, hands in the air.
Wave them like you don't care.
Why not?
I'm in every sector. I mean, I just don't.
Come on, play along.
I sold the XLF.
Well, what sector are we going to say no to?
Every now and then he's got to be a little difficult.
No. What sector are we going to say no to?
I think he makes a good point.
So we own no energy.
You didn't even let me get there. I was going to go energy. That's the last one on my list.
Okay. All right, I'm not going to. So, okay, I'm bad at that game. I don't know what sectors will do best next year. I have opinions. I don't think they'll particularly be helpful, to be honest.
You don't think you have an opinion on whether financials are going to do good next year?
I own them. I hope they do.
Okay, thank you. Industrials. No one wants industrials. Even Jim Lebenthal has Mr. Industrial.
Because they've already rallied. Look, I don't want to be Josh, but I do have to say this about this game. It depends on whether phase one gets signed or not. That's my opinion.
Just play the game.
All right, you know what? Industrials have already rallied too much in anticipation of phase one. So no, they're flat on the year.
There are industrials that have not rallied too much in anticipation.
You can find that in any sector. I'm talking about the sector overall.
Masco, Copart. Nothing. Masco.
Okay, but that's cat.
Nothing to do with okay, but those are the ones you want to be in. There's a sensitivity to
he's talking
the
about
trade
the
talks.
sector overall. You want to pick stocks? He's saying sector.
I want to pick stocks.
That's my point. He's talking sectors.
Can I break up the argument?
If you could pick stocks in the sector,
we
then
should do this every episode.
So my point is,
this is like a Miller Lite commercial, Scott.
Exactly.
Come on, you started
my point is that I want to pick stocks. I don't want to pick sectors, even though I've got a view on some sectors where I'm going to generate return is by picking individual stocks that have underperformed, regardless of the sector they're in.
You think?
However, I'm more dominant in technology and subsectors of technology.
We think the global economy is troughed.
It could be. It could be.
Okay.
However, so here's the giant caveat. There have been multiple moments in the last 5 years where we've thought that. And you get a 1 or 2 quarter recovery, and then it falls back down again. It is very difficult to turn these European economies. I would argue Japan has done as good a job as they possibly can given their situation, but it's really, really hard to get like crazy confident that we've seen the worst out of global PMIs.
I think the rate of decline has clearly stopped. So so we're getting to a bottoming, or we're getting to near a bottoming, both of which are supportive, supportive of equities.
That's why, I mean, I asked that question just so we finish up that conversation on energy, which you guys brought up, you know, a little prematurely, but nonetheless, you guys think that things are improving, getting better, but nobody wants to be in energy?
No, I'm in energy.
But the suppression of energy pricing has to do with technology. Josh talked before about tax loss selling. I'm sorry, Jimmy, you spoke about tax loss selling. If you look at IPOs and shale producers in energy the rest of the year, sends a very ominous signal from a tax selling perspective. Those are the components of the market that you don't want to be in. There are winners in energy, but they are the ones that are able to incorporate the uses of technology. The $75 to $85 price of oil just is not going to return anytime soon.
Okay. Well, with the market rallying to new all-time highs, a group of outperforming and widely owned consumer stocks have reached valuations that are nearly 50% higher than the S&P 500. Is that reason to worry? Are we paying up too high for some of these names? CNBC senior markets commentator Mike Santoli is at the New York Stock Exchange to answer that question. Justified for some of these stocks? And the ones we're looking at, Michael, Disney, Walmart, Nike, Starbucks?
Yeah, so I've just kind of collected those 4 into this little subclass of global consumer growth stocks. They're kind of the anointed stocks, and each one of them, I think, over the past several years has had some kind of a scare or some kind of a bear case that they were going to be disrupted, whether it was Amazon for Walmart, whether it was Netflix for Disney. You can go down the list. You know, Nike seemed to be outmaneuvered by Adidas, and they were sort of selling through Amazon. Now they've fired Amazon. Starbucks couldn't handle its online ordering volume. They figured out the operational side. And I think what the market has done is said, you know what, they have kind of cleared themselves of that big existential threat to their strategy, and they got lots of buy-in by investors. All these stocks now trade 25 times forward earnings, give or take, pretty big premium to the market. I do think last week was a little bit emblematic of how you got this excitement over the idea that we can have this beloved global brand like Disney that's doing the right thing, and we don't actually care that it's not an earnings story for 2 years, if then. You're talking about flat earnings, Walmart, they're talking about low single-digit earnings growth, but everyone thinks they have it perfectly figured out. Nike and Starbucks, I think, are more classically traditional growth stories, but still, in a mature phase, people are paying up a lot to have them show it through the next several years. So all this means, I think, that the market wants to anoint these winners and stay with them, also in a world where, guess what, they have great balance sheets, they can buy back lots of stock and pay dividends, along with at least riding the digital wave. So I'm going to be watching to see if, in fact, there's going to be some give back on the valuation side of, essentially, the street has front-loaded a lot of the success that they're now expected to have down the road in terms of how they transform the business.
Yeah, it's an interesting point of view. I'd like to hear from the gang. Josh, you own Disney, as one of these names at minimum. What do you think of what Michael has put forward?
Look, I think in the United States alone, you have 75 million millennials. Household formation is about to explode. The most popular age to be in the United States right now is 29 years old. We haven't seen that since the early 80s, and you've got this tremendous secular tailwind as a result of the millennial generation, or I don't know what you like to call them, avocado Americans, whatever the preferred nomenclature is. They're moving out of their parents' homes, they're buying homes or they're renting, they're starting families, and they're spending on brands, and the economy is supporting that. They've got jobs, they're getting wage growth. I don't know why you want to bet against companies that sit squarely in the nexus of all of these secular trends. Does it mean the stocks can't go down? Does it mean that maybe they're 2 percentage points in PE ratio more expensive than they should be? Whatever it is, I'm talking big picture. These stocks have been tremendous winners for the last few years, and there's no reason to think that all of a sudden those trends will stop on a dime. I think you could stay with that.
Isn't that the bottom line, Mike?
And they're global. Other ex-Walmart, they're global. So it's a very, very big trend. So you could short it. I don't care. Do it. I'm not.
I would say that absolutely is the big picture story. I do think one thing to keep in mind, though, is for Disney and Walmart, the new businesses everybody is applauding and celebrating with their success in, they are fundamentally inferior businesses to their core. Right, having every cable subscriber in the world pay up for what Disney was giving you, whether you watched it or not, is tougher than charging them $6 or $7 a month. They have to affirmatively choose to pay it, and you have to keep feeding that beast. Now, I think they're well positioned to do it, but you can't lose sight of the fact that they're leaving a more protected business to essentially disrupt themselves.
All right, Michael, we appreciate it as always, making us think. Taking a look inside the market. That's Mike Santoli for us. Here's what else is coming up on the halftime report.
Gimme 5. JP Morgan adding 5 Below to its focus list. The street's #1 retail analyst and man behind the call makes his case and gives us his best ideas for our call of the day. Plus, we want to hear from you. Keep your questions coming. Go to cnbc.com/halftime or tweet us using the hashtag AskHalftime. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes.
So what are you working on? Once in a while, a movie comes along that leaves critics and audiences breathless. That movie is Le Mans 66.
We're gonna beat Ferrari with a Ford.
Are you nuts? Starring Academy Award winners Matt Damon and Christian Bale.
They hate guys like us because we're different.
Don't miss the incredible true story of Ford v Ferrari.
Trust me.
It's one of the year's must-see films. It's sensational, a triumph.
Together, we're gonna make history.
Le Mans 66.
You're gonna want to see this.
In cinemas and IMAX now.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There will be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
it. To the sideline, the man athlete for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the right
Search
spot.
NBA today to start listening.
Along the goal line, Martin scores and takes it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
And a move, and a shot, faced off.
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
I'm Rahel Solomon, and here is your CNBC News update at this hour. The House is telling the Supreme Court it will agree to a 10-day halt in its fight for President Trump's financial records. It says that 10 days is enough for the orderly filing of legal briefs so that the justices can decide whether they will jump into the dispute. Iran hitting back at Secretary of State Mike Pompeo 2 days after he tweeted his support for countrywide protests in Iran following gas rationing and price hikes. During a parliament session, its chairman said it proved Washington's intention to undermine Iran's security. Anti-government demonstrators in central Iraq blocked roads leading to the airport and the holy city of Najaf. They burned tires on one of the main roads as they denounce what they say is rampant government corruption and also failing state services. And heavy storms causing flooding in northern and central Italy over the weekend, forcing the evacuation of hundreds of people. Firefighters used helicopters to evacuate 200 people where a river burst its banks there. And that is the CNBC News update at this hour. Scott, I'll send it back to you.
Appreciate that very much, Rahel. Thank you. All right, JP Morgan has a bargain stock pick to play this holiday shopping season. The firm adding the discount retailer Five Below to its focus list and its top holiday idea list. The man behind the call, Matt Boss, joins us in our call of the day. Just named the #1 analyst again by Institutional Investor for 2019. Congratulations, Matt. Welcome back to the show.
Thanks for having me on again.
Yeah, you bet. So let's talk Five Below, okay? Stocks had a nice move, up 20% year to date. It still sits 18% below its 52-week high. You're looking for a move of 18%. So you're saying this stock has momentum to get back to its high, but then what?
I think you have momentum to get back to the high, but then I also think you have pent-up earnings power and pent-up stock momentum where we break that high. And I think you're looking at a risk-reward here where we could be talking 40 to 50% on the upside. And if I throw a 1 times peg to its 20% earnings growth trajectory that I think this company has for the next 3 to 5 years, I think you're looking at 10 to 15% downside from here, but potentially an up 50% scenario.
Josh Brown has a question for you, Matt.
Hey, Matt, have investors in this space traditionally been rewarded for buying stocks at 44 times earnings? And if not, what's different about this than other high-flying valuation retailers that you've seen before?
So I think a couple things. The setup in Five Below actually reminds me a lot of 2 years ago. So basically May of 2018, there was a lot of skepticism on the near term trends. This time around, it's more on the tariff side. It's more on their pricing opportunity. You saw that stock move 40 to 50% in a month following the print. And I think you have a similar setup. I think 3Q is fine. I think there's a really nice 4Q and holiday opportunity here. They're raising prices for the first time in the company's history. And you have a licensing slate with Frozen 2. So you actually have a product allocation catalyst. So fundamentally, I think it sets up well. And from a valuation perspective, I think what's interesting here is for a 20% earnings grower with high visibility to that 20%, meaning this company is growing square footage. This is a unit growth story of high teens to 20%. Basically, a flat to low single-digit comp is building in at flat margins that 20% earnings growth scenario. So from a PEG perspective, 1.5 PEG, which is basically the average for growth retail across consumer, that's the scenario here for 40 to 50% upside.
Is the stock, well, is the company really the business getting benefit from others' struggle in that exact space that they're in, not just broad retail, but where they're targeted?
Yeah, so, I mean, the two areas that we like in consumer, for not just through holiday, but also for next year, would be off-price and dollar and discount stores. Because I think what's happening with Five Below is you're right at the intersection between value and convenience. And one of the things I still believe is underappreciated with what Five Below has to offer is really the benefit from the consolidation across the rest of retail. So when you think of their 8 worlds and you think of toys and the consolidation in that space with Toys R Us, you think about in the home scenario and some of the consolidation that's happened there. You think about sporting goods and Sports Authority over the last couple of years. I think that they're benefiting from an 8,000 square foot box that generates a tremendous amount of value, not price, but value, in that they're selling iPhone cases and rechargers for $4 and $5, where you go to Verizon or you go to Walgreens, those are $20 to $30. So I think the relative value that they bring to the consumer is really that value convenience proposition, and they're squarely at that intersection, which I think in retail right now is exactly where you want to be.
Which is why I think, Shannon, you own Kohl's, Ross, and VF Corp. You have a question for Matt?
I do. Matt, are you concerned about the prevalence of kid and teen goods in the stores? Because I think that if you look at, from a competitive standpoint, parents going in there wanting to spend a meaningful amount of money, are you worried about, where you've seen something like Forever 21 go under that teen dynamic?
Honestly, I think the more disruption, the better. Now, number one in that scenario would be, you mentioned Ross stores. I think the off-pricers benefit the most in terms of availability of off-price goods and availability created from disruption. But I think as you think about the low end and more from the discretionary side, I think one thing that we didn't even touch on, the consumer backdrop here, I think is very strong into this holiday season, whether it's unemployment, whether you're looking at wages. So I think the backdrop is conducive to owning retail. I think the question is, where in retail do you want to place yourself? And again, I think disruption beneficiaries, I think, are here to stay for a multi-year period, because I still think we're in early innings of store closures and bankruptcies. So Forever 21 to me is just one of many that I think we're going to see continue to be the case for retail. And if you're delivering that value and you're convenient, and third, if you have innovation, I think you're right in the sweet spot for where you can continue to benefit from some of the larger picture things that are playing out across the space.
You have to be really selective, though, right? I mean, you just said the backdrop is conducive for retail, but yet your top holiday picks include only 5 of the 30 retail stocks that are in your coverage universe, and that is not many.
Yeah, I think that the key here is the consumer backdrop is solid, but I think retail will continue to be winners and losers, and you really need to avoid the potholes from a structural perspective. So department stores and specialty mall-based retail, we're still not there. Global brands were split, where I think there's opportunity on the athletic side as you look at a Nike, a Lululemon. You think about action sports with a VF Corp, with North Face and Vans. You look in the off-price sector, we like that sector. I think there's an opportunity with Burlington. And then you look at the discount space, and I think the dollar stores and this pullback that we've recently seen on Five Below, I think sets up well. So yes, you need to be selective, but I think there's opportunity as you look at the state of the consumer today.
Matt, there's a lot of notes circulating in the last couple of weeks about the shortened calendar for the holiday season in a scenario similar to 2013. A name you're talking about today, Five Below, is specifically mentioned as one that's going to experience headwinds, as will Dollar Tree. Can you make us feel comforted that that is not going to be a concern, the shortened calendar?
Yeah, so if you look back to 2013, actually the biggest headwind that was faced in the retail sector is you had the condensed calendar, but far larger was the 2 weeks leading up to Christmas. There was substantial disruption from a weather perspective. So to me, the condensed calendar does heighten the risk that if we do get unfavorable weather, that creates store closures, that obviously that potentially becomes a larger risk. That said, I think a couple things. Number one, as you look at the overall consumer space, last year in December, if you remember, and I'm sure you remember it well, we had almost a 20% pullback in the S&P 500, and it more or less froze the consumer across the board. So you're lapping that, number one. Number two, the macro backdrop that we just talked about, low-income consumer from a wage perspective has had 3 years of minimum wage increases. On top of that, we have unemployment that's basically at a 30-year low. So underlying consumer backdrop, lapping the stock market change from a year ago. Yes, we have a condensed calendar, but I think that consumers coming into the holiday with that set budget, and as long as we don't have weather disruption that creates store closures, I think that the retailers that are set up well are going to be fine in the fourth quarter.
What about mid-December tariffs? Quickly, I got to go, but how are you factoring that in? That's a real risk, no?
I think it depends company by company who has it in their guidance. So Five Below has fully tariff lists 1 through 3, as well as 4 in the guidance, both for this year and as you look forward from a pricing perspective. So I think it's company by company in terms of tariff impact, who's embedded it in guidance and who hasn't. But most companies from a pricing perspective, I think it's going to come down to who has pricing power. The Nikes, the North Faces, the Lululemons of the world have pricing power. Department store, private label, mall-based specialty, I think that's going to be a much tougher battle.
Yeah, appreciate it. As always, Matt. That's
Absolutely.
Matt Boss, JP Morgan, joining us there from the trading floor. All right, up next, the perfect rotation that's going on right now in this market and how investors are playing it through ETFs. Halftime Report is back right after.
As a struggling actor,
whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At TradePoint, we get just how busy you are. That's why we've a handy range of services all in one place. Whether it's cutting timber, matching bricks, or mixing paint, that's one less thing for you to worry about. Making big jobs smaller. So for all you need, when you need it, get to TradePoint. Restrictions may apply. See tradepoint.co.uk.
With less than 3 months until the first votes are cast, the top Democratic contenders reconvene Wednesday night in Atlanta to debate the issues voters care most about.
No one on this stage wants to protect billionaires, not even the billionaire. And that is, costs will go up.
Have already proven that they, in fact... Wherever you are when Biden, Warren, Sanders, and the rest take the stage, you can catch every minute of the action with MSNBC's exclusive live coverage on TuneIn. Just search MSNBC on TuneIn to hear the debate, in addition to pre- and post-debate analysis.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
And welcome back to the Halftime Report. I'm Bob Bizzani. Time for ETF Edge, the market rotation pushing wide swaths of the ETF universe to new highs all at the same time. It doesn't happen very often. At Friday's close, the equal weight S&P 500 was at a new high, along with the market cap weighted S&P 500. Value hit a new high, along with growth. And the defensive consumer staples and healthcare ETFs, well, they were at new highs too, along with the more cyclical technology and communication services ETFs. It seems like every time one sector falters, another takes its place. How long can the perfect rotation continue going, as we call it? Tom Lydon of ETFtrends.com, Dan Draper, global head of ETFs at Invesco. Join me now. And Dan, you don't see value and growth hitting new highs at the same time together. What is it telling you?
I think breadth in the market. Think about a year ago. We were really struggling, worried about geopolitical events. The market was selling off. Now, a year later, we've seen the reversal in monetary policy taking effect. You're starting to see the mega caps now feeding into, as you mentioned, equal weight, into mid caps.
And Tom, this perfect rotation. So cyclicals were strong earlier in the month. Last week, cyclicals were a little weaker, and defensive names like healthcare and utilities were up. It doesn't get any better than that, but how can that continue?
Well, it is a Goldilocks rally for sure, Bob. But one of those things, when you look at value compared to growth, growth has just kicked some major butt out there in the last 10 years. Value, all of a sudden, we're starting to see some money flowing in, and also in certain factors, in fundamental factors, quality factors, value-oriented stocks are starting to get, in this late cycle, a little bit more attention.
Does value versus growth really mean that much anymore? I mean, Dan, Apple's a value stock now. I mean, that's kind of crazy. That's kind of counterintuitive to what you think of. Apple was traditionally a growth stock. Now it isn't. A little cheaper in the market. Does it mean a lot anymore when value is banks and Walmart and Apple, essentially, versus your old Amazon and Microsoft and growth names?
Well, I think it depends on what you mean by value. There are many definitions now through this fragmentation about what value is. But what I do think, you mentioned banks and financials, a big component of value, the yield curve. Now, all of a sudden, we went down below 1.5% 10-year Treasury, now back up to 1.8, approaching 2%. That's a better environment. So you're getting now some macro factors, and as Tom mentioned, fundamentals, in energy, financial, some of these crucial sectors where value can rebound.
And Tom, you like to point out 300 of the 500 S&P stocks account for only 18% of the weighting. There's a lot of smaller stocks in the S&P 500, and yet that equal weight is at a new high as well. Even the smaller stocks are doing better.
It is, and long-term, RSP, the ETF, which is equal weight, has outperformed the S&P 500 for the last 16 years. It's amazing. Bob, 18% of the S&P 500 is in the FANG stocks in Berkshire Hathaway. I think going forward, especially as we're late cycle, do investors who own the S&P 500 feel like they're going to invest with confidence in that way?
That's a great argument for that classic rotation you're talking about. Thanks, guys. Dan and Tom, thanks for joining me. For more ETF Edge, stick around. Our live online show starts at 1 p.m. Eastern Time on etfedge.cnbc.com. We'll celebrate a few ETF birthdays and get the lowdown on some surprising trends in the space. You don't want to miss that. Scotty, back to you.
Bob, we appreciate it. Thanks so much. That's Bob Pisani at Stock Exchange. With the market at record highs, Goldman Sachs out with a new list of 24 stocks poised to outperform. We've got the list, and we're going to trade them next on The Half.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The nights have started to draw in, and at DFS we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. Ah, you can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort. And many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
Oh, what a brilliant photo. Look at Danny in the background laughing. And Matt smiling. Wait, is he holding hands with Sarah? You're kidding!
Bing! Don't miss a thing. Like being able to claim a pair of Silver Galaxy Buds when you purchase the Samsung Galaxy A95G before the 2nd of December. The Samsung A95G has 4 cameras, so you can capture every detail, because the detail matters. Get the latest Samsung Galaxy A95G now at your local Vodafone shop or vodafone.co.uk. Offer available on purchase made by 2nd of December 2019 and claimed online within 30 days. T's and C's apply.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Hi, everybody. I'm Brian Sullivan, and here's what's coming up on The Exchange at 1 p.m. Eastern Time. Better earnings, a soaring stock, and no pressure from regulators. Snap looking pretty good. You're going to hear from the CEO and a look at whether that run can continue. Plus, an explosive piece by the Wall Street Journal claiming that Google uses blacklists and tweaks its algorithms to influence what you see. One of the reporters who broke that big story will join us live. And is Ford's new Mustang the answer to Tesla's Model Y? Is it a Mustang at all? That's ahead at Rapid Fire. We'll see you then. Scott, back to you in the gang.
Brian, appreciate it. Thank you, Brian Sullivan. All right, cyclicals have been in rally mode over the past 3 months. Tech, industrials, and financials as the top performing sectors. And Goldman Sachs thinks the rotation out of defensives still has room to run. They come out with a list today of 24 stocks they say are going to outperform. We're going to show you the list. Rather than me throw some of these out at you all, I want you all to look at the list and tell me which ones you like. All right, you see the brands up there? The stocks: American Airlines, Tapestry, 3M, Kohl's, Prudential. You get the drift, right? MetLife, Urban, CBS, Evercore. Nobody jumping out?
Evercore. Boring one.
Okay.
Private equity underperformed so far year to date relative to Blackstone and KKR. Certainly from a performance standpoint, a environment like we've seen for private equity that we in 18 and 19, I think in 20, Evercore comes around. I like that.
I disagree with this whole premise. Like, these are businesses that it's not about cyclicality that's depressing multiples. Almost every one of these companies is in the process of either facing long-term secular decline or some sort of disruption that's unique to themselves. Look at CBS as a perfect example. Is anyone watching broadcast TV? Will anyone 5 years from now be watching broadcast TV? Do they even have a shot to compete in the digital app economy versus Netflix, HBO, Disney? So put that aside. Harley Davidson. Do you know a lot of people under 50 that are riding motorcycles? Like, I don't understand. We're at all-time highs in the Dow. It's many of the names up here are facing, I don't want to say an extinction level of secular decline, but huge headwinds that have nothing to do with the economy. Nothing whatsoever. The economy is great, and the stock market's at all-time highs. We're looking for losers.
Josh, you and I often decry these lists as what does this list mean? But I like this list for one reason, having nothing to do with what you said. They're all mid-cap to small-cap names. I mean, this is a guy who's out there. He's not saying, "Hey, just buy Apple, everybody, just buy Google."
I'm not saying that either.
No, this isn't about you. I'm just saying in general. All right, this is an analyst who's willing to take a shot on some lesser-followed names where there are inefficiencies in the market. Whether he's right or wrong, time will tell. Some of these names I like, some of them I don't, for the very reasons you mentioned, Josh. But the fact that he's willing to go against the grain and find unloved ideas, I like
American
that.
Airlines.
Use a stop loss on these.
What about American Airlines?
Look, I'd still rather play United. I think the management's better. They've got better momentum. American's been a lagger for a while. I don't know why you'd want to go to the lagger. I think you had to work hard to get that list. Well, actually, not that hard. Just go to the ones that have underperformed by and large.
Right, bottom decile performance.
So it doesn't mean they're going to move higher.
The most remarkable name on that list, 100 billion market cap, is 3M. Who would have ever thought 3M would be on this list? It has been in decline since 2017. That's the one that potentially on a cyclical basis has the most opportunity.
Because it's the mining M of the three M's that make up I mean, we're in a manufacturing recession too, but the mining portion.
It's a momentum market, and these stocks don't have momentum. I haven't gone through all of them. They don't have momentum.
Shannon begs to differ with you on one that she owns from that list.
Well, let's get into it. I'm not opining on all of them, but just in general.
Well, you were hating on the list. You're kind
As
of
a
a
list
hater.
overall, yes, but as I
Shannon?
said, there are some I may like.
We own Kohl's. I think from a retail perspective, disrupting, stores that are moving out of those storefronts. They're not in the lower tier malls. They have pretty good inventory management, and people genuinely, especially middle America, enjoy shopping at Kohl's. I looked at the list, and I would look at something like Toll Brothers. It's actually up over 20% this year. So it's not the worst of the worst. It's just potential opportunity.
Sunshine versus rain.
I'll give you some sunshine. Why would I own
versus
Kohl's
rain.
when I can own
Thunderstorms
Target?
on this side of the desk.
I'd rather stay with Target than
List
Kohl's.
haters.
Yeah, I just don't like the premise of the list. I'm not saying none of these 24 stocks will go up.
You didn't like my other list either.
I like some.
He's
of your
not
lists.
into games today.
Do you like
He's
lists?
into the facts.
I like lists. No, I just feel like this is the wrong time to be like, what are the worst companies on earth? Let me try to take a shot.
That's what everyone does this time of year.
Well, market's making record highs. It's not that difficult to find companies that are in good shape. Why are we looking for companies that are potentially challenged as to their actual survival?
Right. Buy high, sell higher.
What is
I
the
like that.
purpose?
Buy high and sell higher.
You should write a book about that.
It's a good strategy.
There you go. Joe Terranova.
It's worked well.
Copyright what year?
2012, January. Wow. Long
Paperback yet?
Oh, yeah.
Out of circulation yet?
Just bought the last remaining copies. They're in my basement.
God love you. At least you're honest. All right. We're ready to answer your questions. Are we doing that now? Or are we taking a break? Oh, yeah. We're doing it when we come back on the halftime report in 2 minutes.
Driverless cars. There are plenty of parties over the festive period. They'll have food and drink, music too. Some will even have rides and fireworks. But one has all that, plus a big something extra. Big Game 12 is London's biggest rugby party. To watch Harlequins take on Leicester Tigers from just £17 a ticket for children and £27 for adults, go to tickets.quins.co.uk or search Big Game 12. Kick-off 4:30pm, Saturday 28th of December, Twickenham Stadium.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The ETF that tracks financial stocks has jumped over 5% in the past month. According to our data partners at Kensho, after similar moves, the trend cools, with the ETF underperforming the S&P 500. For more, go to cnbc.com/Kensho.
Welcome back. Another reminder, tomorrow a big interview right here on the Halftime Report. Lloyd Blankfein, the senior chairman, former CEO of Goldman Sachs, joins me exclusively for a live interview. We are looking forward to that. Hope to see you there. Traders are answering your questions now. First up, Joe from Neil in New Jersey. Microsoft or Apple as long-term holds?
Microsoft. We played this game in 2015. You asked me at the time. I remember it. It was Apple, Facebook, or Microsoft. I said Microsoft. I remain with Microsoft. I think at some point, investors in Apple are going to have to digest hardware being bundled into a subscription service with the software side, and Apple is going to, at that point, experience a little bit of a pullback.
I had you pegged for both. I'm glad you made a choice.
Did I tell you both in 15 when I said Microsoft?
I don't remember.
Aren't you paying for your iPhone as a subscription via your carrier?
At some point, yes.
Is it most of the U.S. population now?
What about hardware, though? What about these?
That is hardware. Like, I don't hand them $1,200 for this. I pay $36 a month or whatever.
But that's not
watch.
All right.
It's all of it in one full model. Okay, to your point, that's exactly where I think the Apple customer wants to be, where in the mail, you just basically get this every 2 years.
Yeah, I don't even want to go to the store anymore.
Right, and I think that's exactly where Apple goes.
Okay, next, Jimmy from Paul in Alabama. Procter & Gamble.
Yeah, this is a pretty simple one. I think you hold this at least till year end. Look, we talked about tax loss selling or the absence of that earlier in the show, and that's going to be writ large here. Nobody's going to want to sell this in year end.
Wait a minute.
Too many gains.
Wait a minute. At least till year end? I mean, what do you are you telling Paul in Alabama? Paul's trying to get over the Tua surgery this morning. Now you're telling him he should sell the stock at the end of the year?
Thank you for that setup, because the next part of what I was going to say is when you get into 2020, Scott, you have a stock that's selling at a PEG ratio of 3. So it's 23 times earnings. What you're getting for those 23 times forward earnings is about 8 to 10% growth rate. That doesn't thrill me, so I'd look in 2020 to sell it.
Okay, good stuff. Thank you.
All right, good.
Josh wants to know about 2020.
I'm sorry about Tua.
We're running out
I didn't do it.
Okay.
It's an hour show, guys.
All right. David in Texas for Josh. Slack.
Yeah.
Give me an update on Slack.
No update. Long the stock. They disappointed Wall Street's expectations. Still had an incredible quarter. This is one of 100 stocks that have had a crazy reckoning. It doesn't really affect me because I'm long-term in this.
Okay.
It was never a trade.
All right. Shannon from Sean in Hong Kong. Home Depot, do you buy it into earnings?
I would buy it. Most defensible brick and mortar in the U.S. market right now.
Okay. Weiss, lastly to you from Gary in California. Why is Amazon still lagging the market heading into the holiday season?
Because it's been in the headlines virtually every day, not in a positive way, and they lost the web contract to Microsoft.
Okay. Let's do final trades. Shannon, you start us off, please.
Talked about it earlier. Ross Stores, contingent on the buyer finding great off-price merchandise.
Thank you. Weiss.
Baba, they fixed the price, or they will fix pricing Wednesday. I think the stock trades higher into the close today.
The Reform Broker.
Staying with Alphabet.
Okay. Farmer Jim.
Intel really wants to break out to a new high.
Sold my Boeing calls. I'll get into the stock soon.
All right. Good stuff. Thank you all. Thanks for watching. The exchange begins right now.
It does, Scott, and thank you very much. Welcome, everybody. Here is what is coming up. Oh, to be a fly on this wall. Jerome Powell meeting with the president at the White House today. After months of hammering the Fed chair, the president said the meeting was cordial. How long will the good vibes last? And should the market get ready for more fireworks? Plus, Macy's trading at the lowest level since the financial crisis. It is the worst stock in the S&P 500 this year. It is struggling from e-commerce, heavy discounting, and sales expected to fall again. What happened to this iconic brand, and has it finally gotten too cheap to ignore? And Apple strikes the right note with the government. TikTok's U.S. infiltration continues, and an electric Mustang SUV. You heard that right, a Mustang SUV. Really? That's coming up in rapid fire. All that ahead this hour. But first, let us begin with today's markets. Dominic Chu is here with the numbers. Mr. Chu.
Yes, sir, I have those for you, Brian, because as you can see here, it's largely unchanged, and it's been a fairly tight trading range overall. For the Dow Industrial, it's just about flat. Same thing for the S&P 500 and the NASDAQ Composite as well. And just to show you what's going on, we're near the highs of the day so far in the S&P, up just 1 point. That's the highs of the day so far. We were down as many as 8, so a fairly tight trading range so far today. However, take a look at these stocks. They have one thing in common: Apple, Microsoft, Alphabet. They are the 3 biggest publicly traded companies in America, and as you can see here, they're all relatively unchanged. Alphabet's down about 1% right now, but they did all at one point make record highs in trading so far today. So large cap tech and comm services driving a lot of the action. And the stock of the day so far, at least it's come off its highs, but at one point, one of the best performers, and that's cosmetics giant Coty. It's up 1.5%. At one point, it was up about 5%. This after the company, Brian, pays $600 million to take a 51% stake in Kylie Cosmetics. Yes, that Kylie Cosmetics, the one started and still run by Kylie Jenner. And the reason why people had some optimism, Brian, you know how many Instagram followers Kylie Jenner has?
16 more than you.
Yes, 151 million more than me. Back over to you.
You know what's a Bill Miller, if you remember, back on January 31st, sat down with us and said he was buying Coty. The stock is up something like 75% since then. Great job by Bill Miller.
There you go.
All right, Dom, we'll see you in a bit. Thank you very much. Well, hi, everybody, and welcome to The Exchange. I'm Brian Sullivan, in for Kelly today. All right, as Dom showed you, stocks clawing back. They're not up, but they were down earlier, mostly on reports from our own Eunice Yoon that Chinese officials are pessimistic about a U.S.-China trade deal. The Dow setting another all-time high. Every time it goes up, it's going to be a new high. And if you take a look at what is driving those record highs, it's what is they call the cyclicals, companies and stocks that are a little more sensitive to the economy. Financials, they're up 3% since November began. Oil rising a bit, and industrials, led by Boeing, up 4% as a group. That's all since November started. Well, as more bears surrender and turn bullish on the markets, the question is now, what comes next? What's the next driver? Craig Columbus, CEO of Columbus Macro, and Michael Yoshikami, CEO of Destination Wealth Management. Craig, I want to start with you. What exactly has changed since August when, of course, the yield curve was inverted and everybody was crying imminent recession? Suddenly, it's let the good times roll.
Well, I think two big things have changed. One, the global data has stabilized. This got less bad. And two, financial conditions became very favorable. By that, I mean, if you think about in 2 months of asset purchases, the Fed has reversed basically 40% of its 21 months of quantitative tightening. The Fed's cut interest rates at 3 consecutive meetings. And sort of any broad measure of money supply, M2 is growing at 7% versus, say, 3.5% last year. That's a good backdrop for lending and for risk and for housing, and I think that's what's changed.
Michael, do you think this rally's gotten ahead of itself in any way?
I think it's a little bit ahead of itself, yeah. I think the market's obviously rallying on, in my view, based on low interest rates and more particularly trade talks. But if you see some of the softness, and it's a very slight softness, based on Eunice's report out of Beijing, I think the market is susceptible to pullbacks if you don't have perfect news. And I think the market's pricing in perfect news from China as well as interest rates. I'm still cautiously optimistic, but I'm not as euphoric as some are.
Where are you most cautiously optimistic on, Michael? What parts of the market? Where can we still make money?
Yeah, I think you still can make money in stables. I know there's been a pretty significant rotation into stable assets, but if you look at what's happening with interest rates, I think the new normal is going to be long-term low interest rates. There's no real inflation pressure out there. Globalization is going to keep wage rates down, and I think dividend stocks are going to continue to make a comeback. I don't see any reason why one would consider investing in a 10-year treasury at 1.5 when maybe you can buy another asset at 2.5 and 3%. That has an opportunity for upside. So I think that's where there's going to continue to be strength in the market.
You know, ultimately, Craig, stocks go up because there's more buying pressure. More people want to own than want to sell. They drive prices up. What are your clients doing? Is anybody out there getting nervous, or are they saying, you know what, maybe I've missed the rally. I'm not going to miss it anymore, and they're putting new money to work at Dow 28,000?
Well, I think one of the places to put new money to work would be outside the United States, because I think the data is getting less bad in Europe. And I think in particular, you have some easy economic comps in Europe. The fourth quarter was really bad last year, and sentiment has changed. Look, 70% of the countries that make up the all-country world index have a rising 200-day moving average. So that's not catching a falling knife versus last year when 60% had a falling 200-day moving average. And on top of that, if you look outside the U.S., Europe in particular, last year when we had the sell-off in December and the sell-off in May of 19, both of those went down less. So it's a part that's beaten down, it's trading at the discount to the developed market, and you get some protection on the downside. So that's a good place, I think, to put new money to work.
Craig and Michael, it was a good conversation on another record high day for the Dow, despite the fact we're up just a couple of points. Every point matters. Guys, thank you very much. Have a great day.
Thank you.
So it has been a great year for many stocks, most in fact, but not for one. That is Macy's. Macy's, the worst performer in the S&P 500 this year, down 44%. And it's down 75% from its all-time high just 4 years ago. Even worse, lots of retailers have posted big gains this year. Walmart, Target, you name it. No doubt Macy's hoping for a holiday miracle because their sales have come down. especially with a 9% dividend, the highest in the retail ETF, the XRT, and the second highest in the S&P 500, nobody seems interested in Macy's. What happened, and can the company really turn it around? Joining us is Liz Dunn, founder and CEO of Proforma, and Oliver Chen, retail analyst for Cowen. Liz, there's a lot of things that are happening in retail. It's not just Macy's. But if you had to put your finger on one or two big mistakes they have made in the last 5 or 10 years, because they're not suffering now just from now, they're suffering from decisions made years ago. What did they do wrong?
Yeah, I think it was a number of things. They were adversarial to their vendor partners. So I think that's a big thing. They did not focus enough on product, and they didn't focus enough on being a supportive environment for their vendor partners to thrive. And so when that relationship got strained, many of the vendors said, well, hey, I'll just open up my own stores. I'll focus on my own DTC. And once they lost the vendors, the retailer Macy's became not a place that people go to discover fashion or products.
You know, Michael, you look at their EBITDA. Let's just look at the number, Oliver. Let's just look at the numbers, rather. $3.9 billion in EBITDA. Real earnings 5 years ago. That number today, about $1.9 billion. $2 billion in EBITDA wiped out. Do you believe, Oliver, that this is in some ways the bottom for Macy's?
Well, we are worried. We're worried about women's apparel. Also, Macy's faces really stiff competition from off-pricers such as TJ Maxx and Ross, and don't forget about Amazon. Macy's was a little late to the game in terms of more speed in their execution of brands and trends. We're in a new Instagrammable nation with Gen Zs and the transformation of the way people shop, and you really need special product. In addition, you need a really special store experience, and the mall has been a horribly tough place with negative mall traffic. So our preference this week is for customers to own Target. We think Target comes at a nice PE relative to Walmart. It's well positioned for tariffs. There's private label there, and there's curbside pickup. So we're cautious on the department store sector, and Macy's has some unique challenges. They are working hard across different themes, but it's still very small as a percentage of total in terms of re-commerce, what they're doing with Growth 150, and what they're doing with their loyalty program.
But is there any unique opportunity? What I mean by that is, let's talk about the real estate. A couple years ago, Starboard Value, a big hedge fund, Oliver, came out and said they believe the real estate is worth about $20 billion, far more than the market cap of Macy's today. They're developing the airspace over Herald Square, of course. They're massive and sort of iconic home location. Is the market overly discounted in any way the value of all that real estate, or is the real estate itself losing value because the business is losing value?
Well, the real estate is valuable, there's no doubt. Macy's has a lot of marquee locations in cities, and they own these properties. And Macy's is working very hard and quickly to really try to monetize this. That being said, the core retail business, it's flattish comps. And also, there are some underproductive stores. For example, Growth 150, which is about 25% of the store base, drives 50% of revenues. The real problem is in B and C malls and lower productivity stores, where Macy's is really having trouble generating both positive comps and profitability. We've had markdowns, and we're in a great consumer environment. So for Macy's to have trouble executing in a very good consumer environment, that's a tough factor as well.
Liz, is there anybody out there that you could see, based on what we just talked about with Oliver, that might want to come in and make a bid for Macy's? Do they have value to another potential buyer? You're shaking your head.
I don't think so. I mean, I think that the consolidation in the department store sector is kind of how we got here, right, with Federated and May Company. I think we have seen some instances of department stores that are making some positive changes. Nordstrom, Kohl's, doing a lot of innovative things to transform their fleet, but it's the worst neighborhood to be in, and I would say, second to like a JCPenney's or Sears type situation, Macy's has become one of the worst houses in a bad neighborhood. So I think maybe there's value through financial engineering, but as a going concern to try to turn around the Macy's business, I think that's a really, really tough turn, unless they do something dramatic.
Brian, you're right about the fundamentals. It's almost $1 billion of free cash flow, pretty good net debt position, 1.6 times. And the PE is very low. It's at 6 times, a 20% free cash flow yield, a 9% dividend yield. So it's a very inexpensive stock, but this is a battleground. And Liz and I pointed out some real structural problems with what's happening in apparel, and you can get everything every time, every place. So how do you compete in this new world of retail? How do you really engage younger shoppers? Those are major questions, and this week will be a lot of information.
Yeah, they lost $3 billion in revenue and $2 billion in EBITDA in just 5 years. That's the wrong direction, but you never know. We've seen companies turn it around before. Liz Dunn, Oliver Chen, great discussion there on an important company. Thank you. And by the way,
thanks for having us.
You don't want to miss this interview. Former Macy's CEO Terry Lundgren, we're going to get his take on everything that we just talked about. He will join Power Lunch for an exclusive interview that is coming up at the top of the 2 p.m. Eastern Time hour. All right, we are just getting going on what is a very busy Monday. Here's what else is ahead on the exchange.
Coming up, Snap stealth comeback, better earnings, a soaring stock, and no pressure from regulators. We'll hear from the CEO and look at whether its run can continue. Plus, Apple hitting all the right notes, the stock at all-time highs, reports of strong China sales, and a seat at the president's table. And a new investigation shows Google's search results may have more influence from humans than they say. This is The Exchange on CNBC.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores, excludes NI.
At TUI, we can help you find the perfect getaway for two. We fly to over 70 destinations worldwide, so wherever you have in mind, we'll help you get there. Book now and choose from thousands of holidays under $399 per person and pay £0 deposit when paying with direct debit. Book online or in store with one of our travel experts. At TUI, we cross the T's, dot the I's and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At or protected.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Pascal gobbles up the rebound and slams it down. Get your favorite NBA team right here on TuneIn.
A step back, deep three, it's up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
All right, welcome back to The Exchange. And we have got a news alert right now on Juul. Frank Collin joining us now with more on this developing story. Frank.
Hey there, Brian. The state of California is now the latest party to sue e-cigarette maker Juul. The suit that was filed today in the state of California by the Attorney General claims that Juul allegedly marketed its products to minors. The Attorney General holding a press conference right now and also claiming that after teens went on to the Juul website, gave their email, and failed an age verification process, the company continued to market to them. The nation's largest e-cigarette maker is facing several federal and state lawsuits already related to its marketing. In response to criticism, the company has stopped U.S. marketing and also stopped sales of flavors here in the U.S. Again, the state of California is suing Juul over its marketing practices towards minors. Back over to you.
All right, Frank, thank you very much. Altria, a big investor in Juul. Stock not impacted, up 1% right now, but that news just developing. We'll see what happens. Frank, thank you very much. Meantime, shares of Snap are up 3.5% today, adding to its very impressive gain of more than 155% return this year. And Snap CEO Evan Spiegel spoke exclusively with our own Julia Borston, who joins us now from out west. Julia, great interview. You covered a ton of ground including the very hot and controversial topic of how Snap will handle political ads.
That's right, and thank you, Brian. I asked Evan Spiegel how he's tackling political ads. He explained why they're taking a different approach than Twitter, which is banning political ads, and then Facebook, which is allowing political ads, but not fact-checking them. Take a listen.
We've tried to strike the right balance. So we subject all advertising on our platform to review, including political advertising. And I think what we've tried to do is create a place for political ads on our platform, especially because we've reached so many young people and first-time voters. We want them to be able to engage in the political conversation, but we don't allow things like, misinformation to appear in that advertising.
So you fact-check the political ads?
That's correct, yes.
As for all the talk about regulating big tech from Capitol Hill, Spiegel says he thinks it's important that regulation protect consumers without hindering the growth of startups and sort of favoring the big companies that can manage the cost of regulation. He said that that European privacy regulation, GDPR, is a good model, and they think that's really working. But he also said because Snap is about communication between friends rather than broadcasting on social media, he said it's not as exposed to privacy regulation as some of the other social media platforms are. When I asked him if he thought Facebook should be broken up, he said he didn't know, and he said the real question is whether Facebook should be allowed to integrate the back end of all of its different apps. Lots of stuff here, Brian. You can find the rest on CNBC.com.
Yeah, I urge everybody to go check that out. But Julia, don't you go anywhere as well. We want to bring in another voice. Rich Greenfield, partner and analyst with Lightshed Partners. All right, Rich, obviously a great interview by Julia there. The stock is moving ostensibly on that interview. What is it that Snap has done? Is it what Julia hit there at the end where you're not going to like this? Is it kind of like AOL to Facebook's Netscape? And what I mean by that is Snapchat kind of a walled garden.
Actually, I would take just the opposite, Brian. I think what Snapchat's doing a great job is opening up and allowing others to innovate on their platform. So now TikTok is a partner. I had asked Evan on the last conference call, was TikTok friend or foe? And he said, absolutely, they're a friend. I think a lot of investors mistakenly look at them as a foe. But when you look at how they're enabling things like TikTok to push content directly into Snapchat, that's enabled by Snapchat. They wouldn't allow that if it was a foe or if they were really competitive. You're seeing the same thing with Reddit. Reddit's just recently enabled the functionality to pour content into Snapchat. And so I think what you're seeing, Brian, is actually Snapchat's becoming a platform for the mobile generation, for this youth generation, 13 to 24.
I think what I meant by walled garden, Rich, was, and I don't think you disagree with this, I don't know, tell me if you do, which is in Facebook and Twitter, you kind of go outside and you yell, right? You sort of scream to the public or whoever's on your feed. In Twitter, it's not even who's on your feed, it could be anybody. Snapchat, you're passing notes in class to your friends. You're not going to be out there in the public eye, which in some ways I feel like gives them a layer of protection just from a broadcasting perspective.
Yeah, look, it's not, from a consumer standpoint, now look, there are influencers who certainly can broadcast. So there's certainly people like Kim Kardashian, and you could certainly look at kind of online influencers that have large public presences on Snapchat. But certainly from a consumer standpoint, which I think is what you're hitting at, it's very hard to get that mass audience on Snapchat because it's just not designed to be that same type of broadcast platform. But I would say that the content piece, I think, is really not well understood by investors and how successful Snapchat's been in bringing on content partners, not just here, but all over the world. You're seeing a building array of content now. You walk off a plane in India, and you're going to see a localized content in India for that audience that didn't exist a year ago. And the same thing with advertising. You're seeing companies like Spotify now advertise locally on Snapchat in India. And so there's been a real change in terms of the globalization of the product, not just of making the service easy to use outside the U.S., but also bringing on content and advertisers. That didn't exist, and that's why we think this stock is so compelling at this level. And you're really getting an opportunity with the recent pullback to buy this thing again.
And I think the key thing here is when it comes to content, Snap really does take a different approach than Facebook, YouTube, or Twitter. Those platforms are all about allowing people to share their own content, produce their own videos, and share them. And I think what's really interesting about Snap is that their Discover section is all professionally produced content. They're partnering with the media companies that are here in Hollywood, and they're really leveraging that professional content and putting ads next to it, which makes it much less risky than the platforms that are relying on user-generated content and trying to find ads, and also having to police that content to make sure there's nothing inappropriate or potentially violent in there.
But then why are they losing nearly $1 billion a year, Rich?
This is still an early stage company. The reality is, while Snapchat isn't brand new, this is still building, and you're seeing them move towards EBITDA break even. They should get to that during this calendar quarter. You're going to see this company get to free cash flow profitability next year. I mean, this has been a major turn. I think you look at the team Evan has put in place. I mean, I think that is one of the things he should get a lot more credit for than he does. If you look at the transformation of the management team in the last 2 years, it's been dramatic. I mean, you look at Jeremy Gorman now running the whole business side of it, including ad sales. They have really broadened out. They brought in a new CFO. There's been some big fundamental changes in Snapchat that, again, this is a stock we had to sell on a year ago. I mean, this was not a company we liked. This has been a dramatic change. And I think when you look at where it's going and the momentum that we see, as you look on the service, pull up the Discover section that Julia just talked about, you're seeing real name brand advertisers that weren't there a year ago. You're seeing Apple, you're seeing Bud Light, you're seeing Michelob, you're seeing USAA. Like, there's a lot of advertisers that are really compelling now on the platform.
Amazing. Two companies, Facebook and Snap, designed to trade pictures of undergraduates at their respective colleges, now billion-dollar organizations. Julia and Rich, thank you very much. Appreciate it.
Thanks.
All right, coming up, a new and explosive piece by the Wall Street Journal claims that Google not only uses blacklists, but also tweaks its algorithm to influence what you see, despite saying they don't. One of the reporters who broke that big story will join us live ahead. Plus, Warren Buffett's betting that this retailer's turnaround is going to pay off. What is that chart? It's up 58% this year. It's a retailer, and here's a hint. Really big catalogs. We're back right after this.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off to Carson, slithers through the crease between the guard and the center. And
tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Cutting for the net. Scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
All right, welcome back to The Exchange. A nearly 2-year wait is finally coming to a close. The world's biggest company is selling shares to the public with a big caveat. Saudi Aramco is going public, but only to its local Saudi market. Not the U.S., not London, not Hong Kong. You get it. Despite coming in a little bit lower than expected, the company will still have a record-shattering valuation of about $1.6 to $1.7 trillion. Let's put that into a little bit of perspective, shall we? At $1.6 trillion, Saudi Aramco would still be about $500 billion larger than the biggest company on the planet, Apple. Think about that. Now, Aramco is looking to only sell about 1.5% of its company. That's about 3 billion shares, each roughly worth about $8.30 US cents a share, 30 to 32 Saudi riyals. Now, according to reports, the company has canceled the London leg of its planned IPO roadshow, with many suspecting it is because of lackluster demand from international money managers. Still, when all is said and done, the Aramco IPO finally underway, and we could get a $1.5 to close to $2 trillion valuation. Truly remarkable. All right, let's now get a CNBC News update. Here's Contessa Brewer with that. Contessa.
Hi there, Brian. Here's what's happening right now. 2 men and a woman were fatally shot outside a Walmart store in Duncan, Oklahoma. 2 victims were shot inside a car, and the third was in the parking lot outside the store. Police are looking for witnesses now. Duncan is about 80 miles south of Oklahoma City. Defense Secretary Mark Esper meeting with his counterparts from 10 Asian countries in Bangkok. The aim of this annual meeting is to strengthen defense cooperation. Esper announced over the weekend the postponement of military exercises with South Korea. More than 800 rear seat passengers who weren't wearing seatbelts were killed last year in traffic crashes. A highway safety group says the states simply aren't making enough progress getting people to buckle up. The Governor's Highway Safety Association says more than 400 of the 803 people who died would have survived if they'd been belted. Of course, with ride sharing, this is a big deal, riding in the back seat. 2-pound bags of Quest beef cat food are being recalled nationwide after samples tested positive for salmonella. There's also risk to owners if they are handling the contaminated pet products, especially if they don't wash their hands thoroughly afterwards. That's the CNBC News update at this hour. Brian.
I got to be careful with that, and don't drag the cat food out with your hand. I guess that's the attention there. Contessa, thank you very much. Yep. We also want to draw your attention to this, and this is the NASDAQ. The NASDAQ hitting yet a new record high. It turned positive in just the last couple of minutes. The NASDAQ is now 28% higher this year. It's only up a couple of points, but as we noted, every point matters. All right, here's what else is ahead on the exchange.
Coming up, the retailer whose turnaround plan is actually working. The president may be backtracking on his ban on flavored e-cigs. TikTok comes under more pressure, but users don't seem to care. And does the Mustang brand still have the horsepower to get consumers in the door? That's all ahead on the exchange.
When I lost my sight.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There will be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Coffee shop, cashback, cat flaps, cashback, beanbags, rucksack, hire car, buy a car, flapjack, cashback, dumbbells, cashback, takeaway, holiday to anywhere the sun is at, bum bag, laptop, big match, hatchback, binge watching, paintballing, crab fishing, cashback, anything you want to buy, everywhere you want to go. Guess what? Cashback. Whatever you spend your money on, get money back every time with the American Express Platinum Cashback Everyday Credit Card. Search Amex Cashback. Representative 22.9% APR variable. Minimum annual spend to receive cashback. Terms apply. 18 plus subject to approval.
This is someone making an online booking at Ford.co.uk using the words Ford20 so they can service their Ford for £20 less. And this is someone who didn't get their Ford serviced. You see, at Ford, we use Ford genuine parts and Ford-trained technicians. Plus, if you quote Ford20 when you book with us online, you can receive £20 off. Book now at Ford.co.uk or visit your local participating dealer. Ford service. No one knows your Ford better.
Retail customers only. At participating Ford dealers. Cannot be used with other promotions. T's and C's apply. Search Ford Service for more information.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
All right, welcome back. It is 1:32 Eastern Time here on the East Coast. Let's catch you up on a few stories that should be on your radar. It is time now for Rapid Fire. Entering the chamber, Seema Modi, Robert Frank, and Rahel Solomon. Rahel, you were on Worldwide Exchange this morning?
I was. Where were you?
I was sleeping.
Oh,
you feeling okay? Because this is going to go fast.
We'll see.
All right, here we go. First up, the White House confirming President Trump will visit Apple manufacturing plant in Austin, Texas on Wednesday. Apple shifted its Mac Pro assembly to Texas after winning tariff exemptions for computer parts from the White House in September. Now, Tim Cook has gained praise for his relationship with President Trump, all amid the trade war with China. Oh, and by the way, in case you missed it, Apple stock continues to hit all-time highs. Seema, Tim Cook, I'm going to call him the commander-in-chief of Cupertino because he has navigated this beautifully.
You're so right. You got to give it to him for maintaining a strong relationship with Beijing, at the same time trying to please President Trump. Remember, it was back in August of this year when President Trump, via Twitter, basically demanded that all U.S. companies find an alternative production site out of China. And Apple is responding. And optically, this really looks good for the company, opening up a big manufacturing facility here in the U.S.
So good at the optics. I mean, this is a pretty small production item, right? It's not
starts at $4,000. This is a Mac Pro that like graphic designers and film editors use. They don't sell many.
Yeah, they don't sell many. It doesn't take many people to make them. But optically, for him to go to Trump saying, see, we're making it here. By the way, they used to make them there. So it's not like they suddenly decided to make them. They shifted to China briefly. Now they're bringing them back.
And maybe even diplomat in chief, right? Because he's also not losing any points. Apple's not losing any points on the other side with China. I just covered Alibaba last week. iPhone 11 was one of their top-selling products. So the Chinese consumer doesn't feel like they're being slighted in any way, and it's clearly winning him some points over here, too.
It is status symbol, I will say. You look at the back, right? It said, what does it say? Designed in California, not made designed.
Right.
Now the Mac Pro for all 6 people. Can say that. All right.
Who can afford it?
It starts at $4,000. You can get a $6,000 or $7,000. It's turning into bicycles. All right, next up, talk about a rally. We showed you, this was our mystery chart. You know who it is? It is formerly known as Restoration Hardware, now known just as RH. Now that stock has been on an absolute tear lately. Look at that chart. RH has more than doubled in the past 6 months. Retailer in the midst of a big brand transformation that appears to be working for many investors, including a young upstart named Warren Buffett. Rahel Solomon, you have been following the RH story a lot. What are they doing right?
So let me tell you, it's really a fascinating story. So the stock's been on a tear really since May, and then it had that sort of jolt last week when we learned that Berkshire Hathaway invested 1.2 million shares, bought 1.2 million shares, about 206 million at the end of third quarter. So what they've been doing right, it's a transformation that's been a few years in the making now. What they've been doing right is they actually raised their prices.
Yes.
They cut back on discounting. They moved more toward a subscription model where you get a discount, but you also have to pay $100 per year in order to opt in. And it seems to be really working. They've also sort of moved their brand away from being a furniture retailer and more of being a sort of a luxury brand. So when you go into their galleries, you don't call them stores, but you know.
Well,
when you go into their galleries, you can see it.
I feel like this is more of a Robert Frank story because this is secret lives of the super rich and comfortable.
You want to know?
They have $10,000 couches. The Cloud line, I laid down on one in a store. They had the security had to remove me because I couldn't get up or I didn't want to get up.
Yeah,
I mean, they're raising prices.
It's like 2 Mac Pros just for a RH couch. But here's the question I have, whether you're talking about the wealthy or not. Is this the time to be building 17 to 30,000 square foot brick and mortar stores and to be betting your future on giant boxes rather than moving online, raising prices?
Well, the CEO takes the position that they're taking the road less traveled, right? So where we're seeing sort of stores downsize, they're betting, as you said, on a larger, more experiential shopping experience. We're seeing restaurants in their stores. And for them, they seem to think it's working. We're also seeing that, by the way, with Lululemon. They're starting to build these mega stores.
Buying a couch is not like buying a T-shirt.
Yeah, you want the full experience.
You want to feel it. How does it look in my house?
And that's why they're calling these galleries. It's supposed to be an interactive experience where you not only get to use the product, but also enjoy a drink, meet new people. It's supposed to, they have a lot of these social events that take place at these RH galleries across the nation. I would say in terms of tariffs, this is one of the few companies that took a proactive approach when those tariffs were announced in early 2018 by trying to diversify its supply chain, find other places where they can manufacture their furniture, while at the same time raising prices. And investors are really awarding the company for taking that approach versus some of the other furniture retailers, which just kind of stuck or saying we're going to stick it out and hope for the best.
All right. And by the way, I'm just learning literally just now that the CEO is on CNBC tomorrow.
Excellent.
He's always. Have you seen their catalogs, by the way? It's on Mad Money.
They've also expanded their catalog.
Wait till you hear my mailman. He's like, oh, here's their catalog. Boom. And then it's like.
So does that mean you're shopping at RH if you're getting the catalog?
There's an outlet near my house. How do you think I know about the cloud? That's a true story, by the way. All right. Then this. Momentum for TikTok continues to grow. This is a Chinese social media platform that has just been a global phenomenon. It's hit 1.5 billion downloads. It is outpacing both Facebook and Instagram this year. In the meantime, the Wall Street Journal is reporting that TikTok is exploring ways to distance its brand from its Chinese roots as national security concerns continue to grow, as lawmakers are actively looking into TikTok. Robert, I mean, I told my teenager, this is a live mic and video into your life from the Chinese government effectively. She said, no one cares.
My teenage daughter said the same thing. And by the way, they were on it when it was Musical.ly before it became TikTok. And I agree. I mean, there should be concerns. On the other hand, it's basically 4-second videos of people dancing. So I don't know what the Chinese government is really going to get from that. They say that all the U.S. data for U.S. users is housed in the U.S. so that it's not accessible to the Chinese Communist Party. You and I both know that that's probably
every company in China is part of the Chinese Communist Party.
Exactly. So I think it's a legitimate concern.
And there are a lot of international investors. You have SoftBank, you have Sequoia, and those investors will say that TikTok's main success will be its IPO next year, which is potentially supposed to come out in China. And the way they're going to achieve that IPO is by maintaining a bigger customer base, specifically here in the U.S. So trying to downplay its concerns around national security will be of essence.
No country in the world uses facial recognition technology more than China. Look at Hong Kong. That's why everybody's wearing masks, not for the tear gas, so they're not recognized by that.
Concealed identity.
Next up, the New York Times reporting that President Trump may be reconsidering plans to ban flavored e-cigarettes. After advisors warned him that it could hurt his re-election campaign. Advisors and lobbyists apparently told Trump that a ban could alienate many of the same voters who helped him get elected back in 2016. Meantime, a mysterious lung illness linked to vaping has left more than 40 people dead and thousands more sick, according to the CDC. While leading e-cig maker Juul pulled most of its flavors off the market amid regulatory backlash, and as Frank Holland just told us a few minutes ago, the government of California is now suing Juul over this. Seema, is this a flip-flop on the vaping story?
No, I mean, I think this is a politically charged move. Of course, President Trump is going to take this stance. I'm sure there are a lot of concerned parents, as we know right now, about the rise of Juul and the role that it's played in teen vaping. So trying to take a more defensive approach here ahead of 2020 perhaps makes sense.
Do you really think that his voters are not going to vote for him because he went back on vaping?
You wouldn't think that this is
look at the farmers. The farmers have been slaughtered under Trump, and they still support him. I just don't think that this polling that showed that he would lose voters, I don't know where it came from.
It's kind of weird. It's like a 20-year-old in Kenosha, Wisconsin is the only one who's vaping with a flavored cigarette,
and
which is kind of ridiculous and borderline offensive.
It's sad but not surprising that we would make health policy based on one guy's re-election campaign.
But also,
that's the sad part.
Wouldn't vote? This just doesn't seem like an issue that would be divided across party lines, right? I mean, parents, whatever side you're on, would seem to be concerned about young people.
Between vaping and TikTok, this rapid fire's got all the teens covered.
There you go.
All right, finally, Ford unveiling something very unique. Its latest entry into the e-vehicle space, the Mustang Mach-E. The company is transforming its iconic car into a performance SUV, which means it's got a higher roof apparently, in a bid to redefine its vehicle lineup and expand the Mustang brand to a new generation. The top model will go from 0 to 60 in about 3 seconds. It'll feature a battery range of about 300 miles, which is actually useful. The base model will cost about $44,000. Ford says it's part of an $11 billion effort to develop 40 new electric and hybrid models by 2022. There's the car. I tweeted out, Robert, I thought it looked like if a BMW 6 and a Nissan Murano had a baby, an electric baby.
That those two cars would ever get together in the first place.
You never know.
It's shocking.
It's a beautiful baby, though.
You think so?
I think it's a nice car.
Really?
Also, hat tip to a Mr. John Fort, who earlier quipped that it's Mustang Sally, now PTA Mom. That is so clever.
Yeah.
But aren't they really late to the game here? You have Lexus, Tesla with electric vehicles, so many others. Why now for Ford?
Well, because they got to push the thing. I just wonder, is the car good looking enough? I mean, if people...
I certainly think
should it be a Mustang?
I didn't mean the
I think
X6.
Andrew Ross Workin said the same thing this morning.
I think it's not...
Brian, remember when Porsche came out with an SUV, when Lamborghini came out with an SUV, everyone said you should not use those labels on an SUV, just like they're saying now about the Mustang. And look, those cars turned out to be hugely successful.
Well, SUV is widely overused, as we all know the term,
You're
right?
too tall for this SUV.
No, it's supposed to be for guys like us, which is, by the way, as Bob Lutz, the GM executive, called the Tesla Model X an inflatable bug.
Do you like it? Do you like the Mach-E?
I do not.
You do not.
But don't call it the Mustang. It's like Chevy with the Blazer.
There we go.
Chevy. Anybody out there who works for Chevy, turn your TV off. Chevy came out with the Blazer. It looks like a Lexus. Looks like the Lexus NDX. It's not a Blazer. It should be called
the Focus 2.
It's not a Blazer. Or the Flex, because they killed that. All right, good stuff, guys. Seema Modi's the champion. Robert and Rahel, thank you very much.
I'll take it.
Only when I fill in is there a winner. All right, coming up, opportunity zones. We're supposed to bring capital to low-income neighborhoods. Concept at first enjoyed wide bipartisan support, but all that has been changing. We'll get a look at the benefits and the breakdowns in the missed opportunity coming up.
What do advisors look for in an ETF?
At Lidl, we're big on getting in the Christmas spirits with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply. If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The nights have started to draw in, and at DFS we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. You can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort. And many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
All right, welcome back, everybody, to The Exchange. Investors have been pouring billions of dollars into a federal program that promises big tax breaks for putting money into lower-income communities. But the program is now facing congressional scrutiny, and even some of its original backers are raising red flags. Lon Moy's here now with that story.
Opportunity zones were billed as a bipartisan way to help poor neighborhoods attract billions of dollars in new investments. And Senator Cory Booker told CNBC this summer that he was on board.
We have got to make sure that this economy is working for the ideals that we talk. That's why I passed a piece of legislation with Tim Scott across the aisle for opportunity zones.
So were several of his fellow presidential candidates. Mayor Pete Buttigieg championed the program as a way to drive inclusive growth in South Bend, Indiana. Entrepreneur Andrew Yang was part of the think tank that came up with the idea. But now the political winds are shifting. What was once one of the only bipartisan provisions of the new tax law has come under attack as a handout for the wealthy. Take this Opportunity Zone investment fund founded by Anthony Scaramucci. In this presentation for potential investors, the first project is in a trendy neighborhood in New Orleans. The new Virgin Hotel is an experiential lifestyle property with a premium room product. The minimum investment, $100,000.
We've got to have some limits on the type of investments.
Investors get to defer taxes on any capital gains they put into an opportunity zone. They also become eligible to discount those gains by up to 15%. And any money they make on their opportunity zone investments, it's tax-free.
The pool of unrealized capital gains, which is the source of capital for investment opportunity zones, is about $6 trillion. You really only need 1% or less of that capital to have a program that creates a major new marketplace.
But that's a major new problem for another presidential candidate, Bernie Sanders. He tweeted, "We're going to end this tax scam and invest in working class communities that have been fleeced." As for Booker, he's now sounding the alarm as well, writing a letter to the Treasury Department warning that reports of abuse would be a perverse violation of public trust.
And Alon joining us now live from Washington, D.C. All right, Alon, what is the response to this from either Cory Booker or Anthony Scaramucci?
Well, Brian, I reached out to both of them and have not heard back. But more broadly, backers of this program say the fact that so many rich people want to invest in it is a feature, not a bug. There are something like 8,700 opportunity zones across the country. The program is still in its infancy, and they say, of course, it makes sense that the money, at least initially, is going to flow to projects that are low risk, potentially have high returns, and that may be already underway.
All right, Alon, an important story there on opportunity zones. Alon Moy, thank you very much. All right, meantime, the latest read on housing shows solid demand and continued positive conditions for the real estate market nationally. We're going to dig into the data next on The Exchange.
We'll start this.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
At Lidl, we're big on getting in the Christmas spirits with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Sorry, Stevie's a bit poorly, so we won't be coming to nursery today.
Okay, thanks for letting us know.
So I brought Max instead. I packed his favourite toy. He normally naps twice a day and loves playing outside.
Like getting your money's worth? Enjoy the delicious cheeseburger. Just 99p from the McDonald's Saver menu. From 10:30am, except in selected restaurants from 11am. Price and participation may vary.
With less than 3 months until the first votes are cast, the top Democratic contenders reconvene Wednesday night in Atlanta to debate the issues voters care most about.
No one on this stage wants to protect billionaires, not even the billionaire. And that is, costs will go up.
Have already proven that they, in fact...
Wherever you are when Biden, Warren, Sanders, and the rest take the stage, you can catch every minute of the action with MSNBC's exclusive live coverage on TuneIn. Just search MSNBC on TuneIn to hear the debate, in addition to pre- and post-debate analysis.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
All right, right, welcome back. Well, home builder confidence, it did slip just a bit in November, but builders, they remain generally positive on the housing market. Diana Olick joining us now with more on these numbers and some people, building a home behind you, Diana.
Why wouldn't they be, Brian? Look, of course, it was an unexpected drop for the builders in November. National Association of Home Builders Confidence Index dropped 1 point to 70, the first fall since last June, but well above a year ago. Anything above 50 is positive. So why the fall? Well, lower mortgage rates. The average on the 30-year fix was around 5% last November. Now it's just below 4. Of the index's 3 components, though, current sales conditions fell 2 points to 76. Buyer traffic dropped 1 point to 53, and sales expectations over the next 6 months, they rose 1 point to 77. Builder stocks still up on the day and way up about 50% year to date, thanks to lower mortgage rates and strong earnings from the big builders. Builders are trying to pivot to more affordable homes, but they still face high costs for land, labor, and regulatory compliance. Brian?
All right, Diana, thank you. Listen, here's a stat for you. It's been a blowout year for nearly every home builder. The ITB, the home construction ETF, has climbed more than 51%, but there's been one big standout, and this is MI Homes. It is the best home building stock this year. It has soared nearly 110%. Who is MI Homes? MHO, the ticker? Well, they are based in Columbus, Ohio. So they've got the Buckeyes near the top of the polls and the best performing home builder stock. Everything's coming up. I'll stop. Google claims it does not interfere with search results, but an investigation by the Wall Street Journal found otherwise. One of the reporters behind that piece will join us next.
Wall Street banks took advantage of millions of Americans.
Looking for a great phone to take brilliant photos, like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion. Was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off to Carson, slithers through the crease between the guard and the center. And
tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Just Google it. Staggering 93% of all queries worldwide go through Google. And people turn to the search engine for reliable information on just about anything and everything. Turns out that Google's touted search algorithms aren't entirely as objective as they might suggest. A wide-ranging investigation by the Wall Street Journal details Google's arsenal of blacklists, contractors, and algorithmic tweaks to influence what results you see. Joining us now with those findings is Kirsten Grine, one of the Wall Street Journal reporters behind this investigation. Kirsten, thanks for joining us. There were 4 of you involved. Great piece. I would imagine this was a multi-month investigation. What stuck out the most to you? Was it the contractors? Was it the blacklist? Or was it appears that Google or its parent company Alphabet aren't entirely seeming to be honest here?
Thanks so much for having me. Yes, it took us many months to publish this investigation. You know, what really stuck out for me actually was just that Google really wants everyone to believe that when you type in a query, the answer is coming from computer code. But there are so many hard decisions going on every day behind the scenes that we're not seeing about all the results. And learning that really changed the way I look at Google search for sure.
But there's 2 ways, Kirsten, to look at this, right? I mean, if you're a restaurant, okay, and just bear with me here, you might tweak a recipe because you find that the customers want the salad dressing like this instead of like that. Companies are always messing with everything because that's how you evolve. So did your investigation sort of highlight that they were just tweaking things, or were they tweaking things perhaps at the behest of others, like an eBay?
Well, that's actually a really good analogy. So what was the most startling is to see how much pressure Google is under all the time to, as you say, sort of tweak that recipe from governments around the world, from its biggest advertisers like eBay, from interest groups, especially since the election. And so they're trying to battle, how do we make these decisions on what to show? And that is really what was revelatory for us.
And what was Google's response?
You know, Google in general did not agree with a lot of our conclusions.
Shocking.
And they really believe that their algorithms are unbiased and objective. And I think we are showing in this report that they're really not.
I mean, they have people, thousands, as you noted, of relatively lower paid contractors. This is not like 4 guys in a room with giant supercomputers. There are human beings involved in the process.
That's right. And you know, the problem that Google has actually is that if it was just more transparent about how it's making some of these decisions and why, it would really not be as controversial as it seems, right? Because no one's going to object to them, say, putting the suicide hotline higher when you're Googling how to kill myself. But it's just that they're not really clearly explaining how these things work, nor do they have outside parties in there looking at what's going on.
Yeah, I mean, you talk about knowledge panels and featured snippets. I mean, is there any indication that Google might fix these things that you guys and your team brought up? Or is it just, we didn't do anything wrong and therefore we're not going to mess with anything?
Well, that's another interesting part, right? So the face of Google search has really changed, and they're kind of using that to their advantage because in their own minds, they're sort of saying, well, we don't touch those blue links, which is what delivers organic search results. But that's such a small part of a user's experience now that they're basically saying, oh, we could just touch this other part over here and this one here, and that's okay.
Kirsten Grind, that is a big piece. I know you and your 3 colleagues worked for a while on this. Urge everybody to go out and check it out from over the weekend, a deep dive. Kirsten, thank you very much.
Thanks so much.
All right, and that does it for The Exchange. I'm going to go join Melissa Lee for Power Lunch, which, by the way, begins right now.
And we will see you in just a moment, Brian. I'm Melissa Lee. Here's what's new at 2 on Power Lunch. Stocks hitting fresh record highs again today. So forget about recession fears everybody was worried about a month ago. This market is now being driven by FOMO, the fear of missing out. We'll explain. Plus, ahead of the holiday shopping season, former Macy's CEO Terry Lundgren is here. What would he do now to fix a struggling department store? Plus, he will tell us the 2 retail stocks he says are a screaming buy. And later, Trump's $1 trillion tax cut has not exactly turned into the business boom he had predicted. And now FedEx is under fire for not delivering. We've got all the details. Power Lunch starts right now. Let's take a look at the markets right now. Stocks just slightly higher, putting them in record territory. All 3 indices hitting all-time highs. We do have the Russell down by 0.25% there. And check out shares of Disney, the big Dow winner again today. That stock is up another 3%, now at more than 14% in the month of November alone. Brian.
Well, the Dow and the S&P 500 once again hitting new record highs today. Bob Pisani is down at the New York Stock Exchange. Bob, we don't need a 400-point day. Every time we tick up, it's a new high. So, hey, another record high. People are remaining very bullish, are they not?
Shockingly bullish, and it's the diversity of the rally that's made people bullish. And it's not just the fantasy. It's really quite amazing. There's two things you want to notice about the markets in November. Number one is the lows for the day, the low prints have tended to be right at the open, and the market has tended to drift upward. This is a very noticeable trend in November that's not always followed in many other months. Second thing you want to notice is the stunning diversity of the rally. You rarely get this kinds of thing. Look, Boeing and Industrials new high, United Health and Healthcare, Apple and technology, there's Nike and consumer, there's JP Morgan, the banks, new highs. You don't see these kinds of stocks all hitting new highs at the same time, and only the broadest rallies. So we got the S&P at new highs, and essentially mid cap, small cap, even Europe are just shy of new highs. This is not something to quibble with here. This is really essentially the whole market is sitting at new highs, and you could see this. This is a little odd, folks. Look, growth stocks and value stocks are both at new highs. That rarely happens. Then you have technology, which is, of course, a cyclical sector, hitting new highs along with healthcare, which of course is a defensive sector. You see what I mean? No matter where you look, all these polar opposite investing situations, they're all hitting new highs at the same time. What's driving this? Listen, we all see the marginal driver of the stock market is how the trade wars are going. I didn't put the Fed on here, but that's number 2 in my book. I think the most important thing is some changed attitudes on whether global growth is bottoming or out. Remember 6 months ago, it was all recession in 2020. That's not only gone. There are people talking about bottoms in the growth concerns and even bottoms for earnings situations in the S&P. Going to be flat this year, maybe mid-single digits on the upside for earnings. And guys, that's certainly a different scenario than we had even 3 months ago. Melissa?
All right, Bob. Thank you. Bob Pisani. As stocks continue to hit record highs, a new report from B of A Merrill Lynch shows investors' fear of missing out, or FOMO, on this rally is now greater than the fear of recession. So how much more room does this rally have to run? Let's bring in David Katz, Chief Investment Officer of Matrix Asset Advisors, and Evan Brown, Head of Multi-Asset Strategy with UBS Asset Management. Gentlemen, great to have you with us. Evan, I'll start off with you because you actually think markets can go even higher, and we're good through basically the first part of 2020. What's powering that?
That's right, Melissa. So I think a few things. One is that the global manufacturing cycle looks to be turning, and we should get more confirmation of that on Friday when the flash PMIs come out. But also, just if you look historically, when the Fed eases and the economy doesn't fall into recession, that usually is a recipe for really positive rallies, strong price action, 20% rallies over a year. And it looks like that's exactly what the recipe that we have right now.
Evan, what happens if the China trade talks break down completely? What happens if Trump decides to put tariffs on European autos? I mean, all these things, do they have an impact on what your forecast is right now?
They have to, of course. I mean, if suddenly the U.S.-China trade talks break down and you get tariffs placed on all of Chinese goods in December, then that is going to be a very negative shock to markets and the economy. So we're climbing that wall of worry. We're assuming that the incentives are too strong for President Trump to increase tariffs a year before the election, but that's certainly a risk.
You know, David, is there something here that's very unsexy, and Bob did not name it, but I do wonder if it plays into the discussion, which is the shrinking size of the market. I mean, through buybacks and deals and private equity, the amount of available equity every year continues to get smaller, while the population of the United States, especially the investing population, continues to get larger. Is there a really long-term bull story here because the available assets just they shrink?
We think on the margin that definitely impacts stock prices, but what you saw 12 months ago is when sentiment turns negative, when people are worried about stocks, even though there's a shrinking base, stocks will go down, and they can go down very sharply. Of late, you just have positive sentiment. We do think this FOMO is definitely driving stocks higher these last 4, 5, 6%. Historically, it's never paid to jump onto a FOMO trade because you're just worried you're not going to make as much. Because usually all of a sudden some concerns pop up and the market can pull back. Having said all that, we do think there's some great buying opportunities in the market, some very good businesses that have missed the rally entirely. So you really can still put money to work, but you have to be discerning.
I looked at your list and I had to do a double take, David, because I saw SLB and I thought, oh my gosh, that's an oil and gas company, Schlumberger. There's no way that David Katz is recommending buying an oil and gas company, but apparently you are.
Well, if you look at that full list, each of these companies are really good long-term businesses, but have just been miserable this year. Schlumberger, the whole oil group, has done very, very poorly, yet oil prices are still at a pretty reasonable 57 to 58 level. They have a new CEO. We really think he's focused on earnings and cash flow, so we think that stock can be 20 to 40% higher. Top of the list was CBS. CBS has been absolutely a dog this year. Everybody is looking for content. CBS Viacom has that content, and it's at 6.5 times earnings. If CBS Viacom were about 50% higher in the next 12 months, we wouldn't be shocked. You know, that's a very low-risk stock to buy here, even though the market's at all-time highs. This stock is down 20 or 30%.
And Cisco is another one of those stocks, David, that had a rough earnings report just last week. Evan, I want to end it up with you. Bob Pisani was mentioning something very interesting going on in the markets, and that is S&P Value and S&P Growth are both hitting record highs. What do you think is behind that sort of barbell approach in this market? Does that belie investors both fear of missing out, but also caution because we don't know what's going to happen with the trade war?
No, I think the broadening performance across sectors in the market is just a very positive signal. It's not just a low interest rates. We're heading into secular growth story. We really see a positive cyclical bottom here, and so some of the cheap value names and cyclical names can start to rally here as well. So the broader the market is performing, the healthier signal that is, in my view.
All right, gentlemen, thank you. David Katz, Evan Brown.
Thanks a lot.
All right, also topping your headlines today, President Trump meeting the Fed Chair Jay Powell at the White House this morning, and the president describing the meeting as cordial. Steve Leisman joining us now with more on this. And when I saw these headlines, I'm thinking cage match, you know, things being thrown, but apparently it was all very gentle.
We don't know that, Brian. I mean, we know that maybe one person threw some stuff, and pretty sure the other person did not. Fed Chairman Jay Powell meeting with President Trump this morning at the president's residence in the White House. This is their second meeting this year. The president described the meeting as good and cordial, but it comes amid strident criticism of Powell by the president on Twitter, in which, among other things, the president has said Powell and the Fed have no guts for not cutting rates, and some other things like, is he a bigger enemy than the president of China? But the president only said in his tweet this morning, just finished a very good and cordial meeting at the White House with Jay Powell of the Federal Reserve. Everything was discussed, including interest rates, negative interest, low inflation, easing, dollar strength and its effect on manufacturing, trade with China, EU, and others, etc. For its part, the Fed said Powell's comments were, quote, consistent with his remarks at congressional testimony last week. The Fed will set monetary policy, it said in its statement, as required by law. This is what the chairman told the president, to support maximum employment and stable prices, and will make those decisions based solely on careful, objective, and non-political analysis. The Fed has resisted the president's urgings to match rate cuts with the Europeans, arguing that the U.S. economy is in much better shape. Fed officials also have opposed cutting rates to weaken the dollar and assist with the trade war. They argue that's what the president should be doing if he wants that done.
How unusual is this meeting?
You know, it's the second time this year. I understand there's been 3 phone calls between the two.
Was a dinner before?
Yeah, there was a dinner before in which steak was served. I'm trying to find out if there was any food served at all this morning. I guess it's not that unusual. It's unusual in light of the president's very unusual comments, right? I mean, it really speaks, I think, of Jay Powell. After the president asks the question, who's a worse enemy, the president, Powell or the president of China, that the Powell just goes and sits with him anyway.
I know the Fed chair is appointed, but they're sort of quasi-governmental. Is there a situation where Jay Powell could say, no, thank you? I mean, the president is the power move. Come to my office. Could Powell say, no, thank you, respectfully?
Brian, do you remember my sort of comment to you at the beginning? This is a really one-handed fight. Fed does not fight with any of the elected officials. They said anything they wanted in the financial crisis. The Fed really didn't fire back. The president says all of these things, and Powell is asked, everybody wants to start this cage match that you seem to so desire, Brian. But Powell refuses to play.
MMA is a hot sport.
Yeah, it is. It is. And there could be great ratings.
Not MMT.
If Powell were to respond to Trump. So he's asked in the meetings, you know, and ask yourself this question, Brian. If you have one question at the press conference, are you going to raise your hand and say, Mr. Powell, how do you respond to the president? When you know the response is going to be, now, somebody always does, but it's a waste of a question.
But that's like the 10th question. It's not the first. It's not
the
1
10th.
through number 5.
It's become the 10th.
Right.
It started off in the top
I
five.
will say something very good has come from this segment, though. I got both the shaking my head and the eye roll from Melissa Lee.
I know you missed it.
In 3 seconds for the MMT.
Oh, there's
MMA.
plenty more where that came from.
Steve, thank you.
Pleasure.
Thank you. Let's go now to the bond market. Rick Santelli is down at the Chicago Mercantile Exchange with more on how bonds are reacting and maybe a little comment about this Powell-Trump meeting or whatever you want to call it, summit.
Well, I mean, considering his track record with the phone calls, I think an in-person meeting's an improvement, but we'll leave it at that. Look at an intraday of 10s, and really what you want to notice here is that before these futures opened at roughly 8:20 Eastern, most of the move already occurred before our time zone. And we've seen a lot of that. The main session seems to be mostly sideways. Look at a one-week chart of Boone's, pretty flat of late, and I think a lot of this can be explained in the next couple of charts. Look at October 1st chart of the dollar index. It's given up ground. If you look at that early November low, that was right around 97.23. So we're about a half cent above it. But believe me, that's what traders are watching over the next couple of weeks, whether we hold those levels or not. And the reason it's important, look at the correlation over the last month between the dollar and 10-year note yields. It's really gotten very tight again. This is the world acknowledging we're in a pause. And I think this pause is the reason not only that the dollar has been acting a little bit heavy, but also some of these flat ranges we're getting on long-dated sovereigns around the globe. Melissa Lee, back to you.
Rick Santelli, thank you. Coming up, new numbers igniting an old debate. Do the president's corporate tax cuts provide a boost to the economy? We've got all the details. But first, former Macy's CEO Terry Lundgren joins us in studio. Out of the holiday shopping season, his forecast and his best bets in retail are coming up next.
The Bond Report is sponsored by PIMCO.
I believe ETFs are a great way to invest in the market. I just don't believe in market cap-weighted ETFs. My research shows how fundamentals can lead to performance, and that's exactly how WisdomTree builds their ETFs. To me, it's a better way to invest. Legacy ETFs that track the market? That's yesterday. Modern alpha ETFs built for performance? That's WisdomTree.
Carefully consider the fund's objectives, risks, charges, and expenses before investing. Obtain a prospectus at wisdomtree.com. Read it carefully.
Okay, you ready?
Yes.
Now.
A Peloton? Give it up for our first time ride.
All right, first ride. I'm a little nervous, but excited. Let's do this. 5 days in a row. You surprised? I am. 6 a.m. Yay.
Rising with the sun.
That was totally worth it.
Let's go race in Boston. 50 ride.
She just said my name. A year ago, I didn't realize how much this would change me. Thank you.
This holiday, give the gift of Peloton.
Tomorrow on Squawk Box, Yum Brand's former CEO on new fast food trends and tastes, plus Home Depot's quarterly results and analysis tomorrow.
Why is The Tonight Show the people's choice for nighttime talk show?
I am speaking in all caps.
I love you. I love you.
Imagine binge watching that.
This is Kate. Hey. She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
You went to college? You're smart. So why are you getting ripped off on your student loans? At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month by refinancing to a lower rate. Don't get ripped off on your student loans. Let's focus on your future, not your debt.
Visit Credible.com and in 3 minutes, see how much you could save.
Welcome back to Power Lunch. It's a retail earnings parade this week with a mix of big box companies and department stores, including Macy's, set to report. We're also just 36 days away from Christmas, and it's been a tough year for department stores. Macy's, Nordstrom, Kohl's, all down double digits. So what's going wrong for these retailers? Who will be the biggest winners this holiday season? Here for Power Lunch exclusive is Terry Lundgren, the former chairman and CEO of Macy's. Terry, it's always great to have you here with us. I usually don't ask this as the first question, but who do you think are the winners are right now? Who's getting it right? Because that'll give us a real insight as to what's going wrong with the others.
I'm going to give you guys like a big story here. When I turned over the CEO reins to Jeff Gannett, I'd never purchased a retail stock. I just thought it was sacrilegious to own anybody else's stock except for Macy's. And I bought Walmart, Target, and Home Depot. Those are the three that I bought.
What about Macy's?
Well, I think I'm still the largest shareholder of Macy's. I'm doing okay there, so I got plenty at stake there. But those are the three retailers that I bought, and I'm happy to say I think they're all three doing extremely well, not just on their stock price, but I think they're just performing well with the consumer.
What is it about what they're doing that's right?
Starts with leadership. I really like particularly Doug McMillon, Brian Cornell. I think those two individuals are terrific leaders, and I sort of bet on people as well as companies, and I think those two had some good ideas. They're changing, Melissa. They're investing in the future. They're trying things that may not work, but you got to try them and see how and don't decide yourself. Let the consumer decide if it's going to work or not. Both of those cases, the consumers responded positively, and I think Home Depot's just been on a tear and just been on a positive run.
What's happened to Macy's though? The stock's the worst performer in the S&P 500 this year?
I know.
If you're the biggest shareholder, then you're getting whacked. And I'm not trying to pile on, but this is an iconic brand with many iconic locations. What's happened?
Yeah. So listen, I'm going to start with the industry because everybody's been whacked. Macy's harder than others, but everybody's been whacked. I think Nordstrom's whacked. I think Kohl's is whacked. I think all of them have been hit hard. There's too much retail space in the United States. There's way too much retail space. This has been a problem for a long time, but the bubble burst when the online business started aggressively growing. Think about it this way. 20% of the businesses, of apparel businesses now sold online. Well, 20% of the stores haven't gone away, and the total pie isn't growing. So something's got to give, right? So business is just being transferred in terms of consumers from one pocket to another, or one purchasing behavior to another. And that's part of it. And then the off-price business has been growing aggressively. So consumers are saying, a lot of these brands look familiar to me. They look similar, maybe a different label on it, but it still says this brand and that brand. I'll buy there, and that's good enough. So the business has been cut up quite aggressively. And so you put that consumer behavioral change with too much retail space, and I think you have the formula for a need to change and a need to contract. Macy's did close 20% of their stores before I left. That was a good start, I think. I think retail needs to make that adjustment as well. You're starting to see it with Sears. Maybe it's going to be a lot more than 20%. The Barney situations talk about a range of top to bottom. So I think you're starting to see that pullback. It's going to take some time.
How many more stores need to be closed before we're not overstored anymore?
Quite a bit. Now, America can afford to have more stores than our competitors. We buy more, we spend more, but not 5 times more than Europe. So we've got a long way to go, I think, for this to take place. But I think it's happening. And I think the mall developers are aggressively pursuing this too. I think the good malls are going to continue to be good malls, and they're investing in other ones to try to make them better. They're changing what's in the shopping center. It's got athletic equipment now, or it's got sports, it's got food, it's got entertainment, and I think all those are good adjustments that people are making now to bring this business back to where supply and demand needs to be.
Does the whole experience though need to change? I mean, in 5 years, does going into Macy's, is that going to mean something different from what it means today? Because I personally don't go into Macy's because it's a pain in the neck to navigate. If I want to buy it's too big.
Well, they're talking about one store. Macy's has 500. They're not all 1 million square feet.
Yeah, that's true. But in general, department stores in general, it takes longer to navigate to get what I want.
Yeah, I totally get that, and I totally understand. But this is a difference because when I was growing up, you didn't have an iPhone in your hand that could give you all of the search data to tell you where you're going to go and what store you wanted to go to and what price you wanted to pay. This is all available to you now. So your shopping time can be much more condensed now because you've done your research. You can go in and you can make your purchase and go.
There's two things I want to address. We had a guest on, Liz Dunn. You might know her, pro forma research, former Wall Street analyst. She made a comment that it's not just the industry that for years you guys had bad relationships with your vendors. I want you to listen to her and then respond if you don't mind, Terry.
Sure.
They were adversarial to their vendor partners. So I think that's a big, big thing. They did not focus enough on product, and they didn't focus enough on being for their vendor partners to thrive. And so when that relationship got strained, many of the vendors said, well, hey, I'll just open up my own stores. I'll focus on my own DTC. And once they lost the vendors, the retailer Macy's became not a place that people go to discover fashion or products.
Well, I can only say, I want to make sure I don't come off defensive. I may, but I'm going to give it a shot. I just want you to know that vendors didn't seem to have any problem whatsoever when we were a retailer in America in 2010, 11, 12, 13, 14, and 15. So the vendors were very happy because we were their largest. Now, when business gets soft, their business gets soft because we're their largest partner. So when they added distribution to off-price channels and the consumer was choosing between this and that, it became a bit of a challenge. And now, when those start to hit a wall as well, and their business it becomes difficult, it does become strained. Not with just Macy's, by the way, but with everyone.
One more here, because your market cap, the market, not yours, the market cap of Macy's is about $5.5 billion.
Yes, exactly.
$5.5 billion. Starboard Value Partners, a hedge fund, I think 2 or 3 years ago, had a report that showed they estimate the real estate of Macy's. Now, this was a couple years ago. So
right.
I'm just throwing them at $20 billion.
I remember.
Let's say they're wrong by a couple billion. That would still imply the real estate is worth 3 times more than the operating company. How do you value the real estate of Macy's?
Well, I think that there was lots of discussion about that, and they did leave the stock, and I don't believe they left with a profit, because as we stood side by side, and by the way, I learned a lot through that process. They taught me a lot, and the fact is that we didn't need as much real estate as we had. We ended up selling one of our San Francisco locations and consolidating the inventory into 2 for $200 million. And so, and again, we turned that right around for investing in the stores and giving it back to shareholders. So we learned a lot from that experience. Having said that, they were definitely incorrect about their overall assumptions, because what are you going to do if you sell a store in a mall? What are you going to turn it into, an apartment building? So there wasn't really a buyer on the other side for those transactions, and so that's why that theory wasn't necessarily a good one.
All right. Terry, great to speak with you.
Thank you. Nice to see you both.
Come back anytime. Terry Lundgren, former CEO of Macy's.
All right, coming up, what Elizabeth Warren's tax plans for the wealthy could mean for you as an investor, even if you're, not a billionaire. And Coty shares higher today. They're up 85% this year. Can it or other makeup stocks continue to deliver beautiful returns? We'll talk about that as Power Lunch returns right after this.
Each day. On 3, our unlimited data is actually unlimited, like 4 reels. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
The good snap. The ball put down. The right-footed kick is up. It's got the distance. It's accurate enough. It is good. The hand off the Carson. Slithers through the crease between the guard and the center.
Tonight, TuneIn has your Monday Night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lofts one in the end zone. It's a diving one-hand catch. The tight end in the back of the end zone.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen now to 30 for 30 Podcasts on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Check out shares of Coty on the rise after the beauty brand took a majority stake in Kylie Jenner's cosmetics company in a deal worth $600 million. And Coty glowing alongside other makeup stocks this year, Estee Lauder and ELF joining Coty in a pretty good rally in 2019. Let's bring in your Trading Nation team. Matt Maley of Miller Tabak and John Petrides of Tocqueville Asset Management. So I guess, Matt, eyeball the charts here. Does Coty look like it has a little bit of a sustainable run in it here, or would you prefer either of the other beauty stocks?
Well, I mean, it does look quite good. I mean, it's a little bit more risky. If you're looking to be a little more defensive or a little more conservative, I should say, Estee Lauder looks quite good. I mean, the stock has had a nice run up until late or early in the fall this year. A very nice strong run, actually a multi-year run, and then it pulled back about 12%, saw a correction. However, the bounce we've seen more recently is taking it above its trend line going back to September, and it's now it's bumping up against its October highs. So if it can rally a little bit further above 193.25, that'll follow its nice breakout of its trend line to a new higher high, and that would be bullish. However, on a longer-term basis, Coty, I mean, this is a stock that until this year had been getting clobbered. It was down for 4 straight years, down of well over 60%. And the rally has only just recently broken above that multi-year trend line. If it can take it a little bit further and break above 1360, that'll follow that broken or that upward break of the trend line with a very nice higher high and will confirm that its long-term trend has broken to the upside. And so, a little bit more risk, but more reward, because whenever you buy any stock in the early stages of a change in trend, it always gives you more upside potential.
And John, Coty up 1.5% or more on a day when they've made an acquisition of a private company, pretty sizable outlay, suggests that the market is saying the strategy is right. Would you agree with that, or what are your general views of this space?
Yeah, I'm kind of looking through the stocks and looking at the idea of the transaction where, Coty made an acquisition into Kylie Jenner, who's the master of all influencers on social media. And it shows you the power that we're in the environment of brand building and how social media can really, if you're an influencer enough on social media, the economic benefit that it can have toward you. And here's a company that's willing to pay for the eyeballs and the followers that Kylie Jenner has more so than anything else. So this could be a new paradigm for the consumer staples and packaged good industry, which, has been suffering because of weak mall traffic and or the rise of e-commerce, because shelf space has basically become infinite in an e-commerce world. So I would expect more acquisitions like this going forward, because it could be the new model for companies to acquire top line growth by partnering up with key influencers.
Yeah, as they struggle to just figure out how to tap into the tastes of younger people, especially. It's going to be an ongoing issue. Matt and John, thanks a lot for joining us today. And for more Trading Nation, head to our website or follow us on Twitter @Trading Nation. Melissa, back over to you.
Mike Santelli, thank you. Ahead on Power Lunch, the New York Times reporting FedEx paid $0 in taxes in 2018 after the 2017 tax cuts. And Fortune out with a fiery op-ed saying Trump is just bad for business. We'll talk to the author of that op-ed next. Plus, stocks hitting yet another record high today, but one sector is stuck on the sidelines of this rally. We explore the fate of the energy sector and the end of an era beloved by New Englanders. Dunkin' Donuts bids farewell to the iconic double cup in order to hit its sustainability goals. We say our goodbyes right here on Power Lunch. Stay with us.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
Some people say buy and hold investing is dead, but there's nothing wrong with that strategy as long as you don't buy and forget about it. It's important to make sure that your portfolio doesn't become overly concentrated in one stock or sector due to market appreciation. So don't forget to rebalance your portfolio every 6 to 12 months to maintain your target allocation. I'm Randy Frederick, and Schwab is the better place for traders.
So, Schwab, tell me about...
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe it. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Haskell gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three, it's up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Along the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Move, and a shot, they stop!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Hey, NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
Hi, everybody. I'm Contessa Brewer. Here's your CNBC News update this hour. The House is probing whether President Trump lied in his written testimony submitted to then special counsel Robert Mueller as part of the Russia investigation. A federal appeals court is hearing a case involving the House's request for secret grand jury evidence gathered by Mueller. The Supreme Court has put a hold on a subpoena for President Trump's financial records to be turned over to Congress. The court has not set a schedule for when it will allow the documents to be released, but it has asked the House to respond Thursday to
after the president's request to block the subpoena. The House has opposed any lengthy delays. California is suing the nation's biggest e-cigarette maker, alleging Juul Labs deliberately targeted teenagers with its early marketing campaigns. It's the latest legal action against Juul. Airbnb has joined the ranks of leading sponsors of the Olympics. A 9-year deal will help provide accommodations for the world's biggest sporting event. The partnership with the IOC runs from the Tokyo Games next year until 2028. That's your CNBC News update this hour. I'll send it back to you, Brian.
All right, Contessa, thank you very much. Well, the oil market is now closing for the day. Let's go to Frank Holland at the CNBC Commodity Desk. Frank.
Hey there, Brian. Trade war concerns putting a lot of pressure on oil today. Brent crude, the international benchmark, you can see it's down 1.5% right now. WTI, the U.S. benchmark, down more than 1.25%. Now, this is following comments from a source in the Chinese government that Beijing is pessimistic about an end to the 16-month trade war. Concerns about a plentiful supply of crude in 2020 also really weighing on the market. OPEC widely expected to cut production when it meets in December. We're also keeping our eye on natural gas prices. They're also falling sharply, nearly 5% in response to milder winter weather and elevated supply. Back over to you.
All right, Frank Holland, thank you. FedEx at the center of a controversial New York Times report which claims despite the company's $0 tax bill, it has not made good on its promise to invest more. FedEx CEO Fred Smith was a big proponent of the plan and said America needed the cuts. In fact, he made the case right here on Power Lunch.
The country is not investing enough, either business or government, to produce the type of blue-collar, middle-class wages that people want to see. We're not even back at the pre-financial crisis levels, and federal investment in infrastructure is down to 1948 levels.
And it's not just FedEx that didn't deliver. U.S. investments in assets like buildings and equipment spending actually fell in the second quarter of this year, the first decline since 2016, and contracted further in the third quarter. Overhyped tax cuts, just one of the problems with Trump's pro-business agenda. This, according to a fiery new op-ed from Fortune's Jeff Colvin, with the headline, "Why Trump is Bad for Business." And the magazine's editor-at-large joins us now. Jeff, great to have you with us.
Hi, Melissa. Great to be with you.
Should we use the tax cuts as an example of why Trump is not necessarily good for business? I mean, the tax cuts, companies use the savings as they saw fit. There was no obligation to spend more money on equipment or on buildings or anything like that. And plenty of companies either bought back shares or they raised the salaries of their workers.
Yeah, well, the tax cut was undoubtedly good for business. I mean, he did two things in his first year. Things he promised he would do, and he delivered on the promise. He said, we're going to cut regulation on business, and we're going to cut your taxes. And he did both of them. Lower taxes are good from business's point of view. And personally, I think it's just fine that there were no requirements that they spend the money on capital expenditures or wages or anything else in particular. Having the government direct how companies invest their money, I think, would be overall a pretty bad idea.
So why do you say Trump is bad for business then?
Well, it's what he has done after his first year. As I said, the first year really was a home run for business, and you could see it in the stock market. Stocks in that first year went up tremendously. Profits went up. It's what he has done in the 2 years since then that is now making him bad for business. He has essentially wiped out all the good stuff that he did in his first year, and it comes down to just three big things. One, his trade policy. What happened at the beginning of 2018 was he launched the trade wars. Two, the immigration policy. Business likes immigrants. Business needs immigrants. They do not like his stance on immigration. And then overlaying all of it is this tremendous uncertainty about policy. He has so often contradicted himself or changed his mind on big policy matters. You know, the Export-Import Bank is useless. Well, no, it's good. China's a currency manipulator. Well, no, it's not a currency manipulator. Many of these decisions over the past couple of years, business hates uncertainty. So when you put it all together, the result is CEO confidence, as measured by the Conference Board, at the most recent reading was the lowest it has been since the financial crisis 10 years ago.
Sure, but despite all of this, Jeff, we still have the longest economic expansion on history. We still have stocks at record highs, basically, and we have historically low unemployment. So in spite of all of what you said, we're still hanging in there. So isn't it too early to say, hey, you know what? The president is actually bad for business?
Well, of course, the stock market is the obvious retort to what we're saying in this piece. You know, the stock market, all the indices are at all-time highs. How can that possibly mean that it's bad for business? Well, what you need to remember is that these current record highs are only a little bit higher than the highs that were reached in January of 2018, almost 2 years ago. And in fact, if you look at the market indices from January 26, 2018...
But that just means that we didn't reverse. We didn't reverse the gains.
But what I'm saying is he put in two great things for business in his first year, the tax cut and the regulatory rollback. It is kind of amazing that he has managed to erase everything he did since then. And so the worry among CEOs, the reason they're so pessimistic, is that they're afraid that now he is doing more harm than good and he doesn't have any more policy levers to pull.
Yeah, but Jeff, agreed, but if you had to balance out either of the two or three leading Democratic candidates, maybe with the exception of Buttigieg, with Mr. Trump, and again, I'm not speaking politically, I'm speaking economically and from a business perspective, you're still probably going to go with Mr. Trump most of the time.
Yep, and there's no doubt about that. If this turns out to be a contest between Donald Trump and Elizabeth Warren, there is no question how the vast majority of business people will vote. Obviously, if it's Bernie Sanders, the same, only more so. And I'm not even sure that Pete Buttigieg would be all that attractive to business people either. So you're right. When it comes time to vote, Trump may be the best alternative. Well, of course, it's also true that Michael Bloomberg could turn that all around considerably.
Jeff, thank you. Pleasure speaking with you. Jeff Colvin of Fortune.
You bet.
You know, the one thing just quickly I'll say about that FedEx story in the New York Times, they did a lot of good reporting. They didn't mention at all the Amazon fight. How FedEx has been fighting with Amazon for 2 years. They killed that business. And I just wonder if FedEx's lack of investment was because they were in the middle of a massive business transition.
Could be.
Who knows? All right. Elizabeth Warren, the aforementioned, proposing several new taxes on the wealthy. When you combine them all, they could force a major shift in how the wealthy invest. Robert Frank, and maybe even not just the super wealthy.
Yeah, just the mere multi-millionaires, Brian. So,
yeah. Sounds pretty good.
you add them all together. Elizabeth Warren's wealth tax and healthcare taxes could bring tax rates for many billionaires and multi-millionaires over 100%. Now, she's proposing two categories of taxes. You've got the annual wealth tax, that's on assets, and then you've got income taxes of up to 58% on investment returns. You combine them both, those two taxes could erase any gains for big investors. Here's how it works. If a billionaire invests $1 million, earns a 5% return, that's a gain of $50,000, he would pay a wealth tax on that $1 million of 6%, and an income tax on the gain of 58% for combined taxes of $89,000 on a $50,000 gain. So well over 150% tax rate. Even multimillionaires would lose most of their gains. If someone worth $50 million invests $1 million, they get a 5% return. They would pay combined taxes of $49,000 on a $50,000 gain. So that pretty much wipes that out. Now, big investors would have to see returns well over 7 or 8% to have a real gain, which would mean that would drive them into the riskiest forms of debt, stocks, and hedge funds just to make enough to get over that tax hurdle.
Those are crazy numbers.
It is crazy, and it's crazy especially when you compare it to the 2 cents that she's talking about. Why don't the wealthy just chip in 2 cents to give everyone else a chance, which sounds very reasonable until you put all her plans together and you consider the 2 cents is only the wealth tax on the lowest part, the $50 million, when you get up to the billionaire at 6%. But it's these other taxes, the investment taxes, the capital gains treated as income. Those are the things that everyone's missing.
I mean, whatever you think of, whatever any candidate, that's their own business. I don't like to talk about politics, but I'll say two things. Number one is that the federal government spends $11 billion a day. $11 billion, or I think an hour, whatever it is. The point is the numbers that we add up are going to be a day or two of spending, and that's fine, whatever you want. The other aspect of that is there is a level of sort of, are you going after certain groups? We don't know if this is even constitutional, do we?
Correct.
There are some people who could make the argument that the Fifth Amendment against confiscation does make this wealth tax illegal.
Right. There's the other issue.
I don't know if it is or not. And others can make the other case.
Lots of people claim certain forms of taxes are double taxation. This truly is, because you're taxing the asset,
right,
and then, in addition, you're taxing the return on that asset, which is why it's almost impossible to make any return when you're taxing both.
And then we're not even talking about the death tax yet.
That's right. You haven't even added the new
right.
estate tax, which would also be higher.
Well, just don't die.
That'll be the next segment.
Robert, thanks.
Thank
Robert
you,
Prince.
guys.
Coming up on the tasting menu, Snap Claps Back, the latest in fake food, and the end of double foam at Dunkin'.
This CNBC program.
On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane of the rim, throwing right corner three. Another one.
TuneIn Premium brings you every minute of the NBA season, so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
The good snap. The ball put down. The right-footed kick is up. It's got the distance. It's accurate enough. It is good. The hand off the Carson. Slithers through the crease between the guard and the center. And
Tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone. It's a diving one-hand catch. The tight end in the back of the end zone.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
10 million people already subscribing to Disney Plus, adding another recurring charge, though, to all your monthly bills. So here's the question. Are we, as Americans, are oversubscribed? Kate Rooney's in San Francisco with a look at this growing trend, which is, I would imagine, Kate, just eating into our cash flow without us even realizing it.
That seems to be the case for a lot of people. So what seems like a small monthly charge can really add up as people are now subscribing instead of actually owning their assets. According to McKinsey, half of Americans have at least one subscription, 46% have a streaming service like Netflix, and around 10% have a box subscription or e-commerce like Stitch Fix or Rent the Runway. And Brian, turns out most of us are way off when it comes to actually guessing our monthly bill. Another report says 84% of Americans underestimate their recurring monthly expenses. The average consumer spends around $237 a month. That's according to West Monroe Partners. The media options are growing with the streaming wars, but it's also e-commerce, which is growing by more than 100% every year. That's according to McKinsey. And this is good for tech companies. It gives them revenue predictability, but not always is good for consumers. So according to Northwestern Mutual, a third of people's income is already going to paying down debt obligations. This really comes down to behavioral economics. So financial advisors I spoke to said people aren't thinking of a $5 subscription as money that would otherwise go to retirement, guys.
But 5 plus 5 plus 5 plus 5 plus 5 plus 5, whatever, might. Right? Math.
Oh, it can Completely. And I think it's adding to debt, and it's also making it so that you're not thinking about savings. I talked to one financial advisor that said that's not a subscription model as your 401k. You don't think of it, but it's sort of the death by 1,000 cuts situation. But tech companies don't seem to be turning around. It's really a predictable, good revenue model for them. So it's just a matter of adding up your finances, which I did before on the back of an envelope, and I was shocked.
And it lets them raise prices because you don't know what you're paying. You think you're paying less. All right, Kate, thanks.
Right.
Kate Rooney in San Francisco.
Thanks, Melissa.
Every sector in the S&P 500 is up at least 10% so far this year. That is except energy. In fact, energy is the only sector in correction, down 14% from its April high. What can get these stocks unstuck? That's next.
It is nice.
Cutting for the net. Scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three, it's up and in!
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
All right, welcome back to Power Lunch. Ho-hum, another day, another record high for each of the three major averages. But the rally has left one sector behind, way behind. Energy, the only sector still in correction, down more than 14% from its recent high. It's also the only sector to lose value in the past year and the worst performing sector of 2019. In fact, most stocks are down over 40, 50, or even 60% in 12 months. Bottom line, have we seen the worst of this electric slide? Will the sector continue to fizzle? Let's bring in Mike Kelly, partner at Seaport Global Securities. And Mike, thanks for joining us. Listen, I would imagine this is a fantastic time to be an energy equity analyst. And please note my sarcasm on that because it's been impossible. But if you go to get your MBA, any major valuation metric, all the models everyone teaches you, by every single rational and historical measure, nothing with the way that energy stocks are trading seems to make much sense. Is that a fair statement?
I'd say yes and no. And yeah, thanks for those lovely stats that you rattled off there. It is a great time to be doing this. And I'll tell you what, Brian, I think what investors see, and they're not wrong, is a very messy 2020. We're set to grow production, non-OPEC, over 2 million barrels year over year. Demand growth is going to grow maybe half of that. So it's an ugly macro backdrop, and investors want no part of that until we get more clarity of how that shapes up. It's probably a 2021 event.
And what I mean by that is, with this historical stuff, is that you've got some of these oil stocks that are trading literally below financial crisis lows, and in some cases below where they were when oil was at 10 or 15 a barrel. But one thing they didn't have back then, I guess, Mike, was massive debt loads. Is debt the real problem here?
It's a killer. So, I mean, that combination of high debt loads and the potential to have oil back with a 4 handle on it, maybe a 3 handle at some point next year, nobody wants any part of that. And it has changed versus where we were previously. And we have this, this supply-demand mismatch that we've never really had to this extent in a long, long time.
So unless we see oil turn around, is it safe to say, Mike, that 2020 or 2021 could be a very good year for bankruptcy attorneys and bottom feeders in the oil and gas industry? Is right now the goal of analysts and investors simply to pick the companies that are going to survive?
Yeah, that certainly is kind of our tune. We've said there's a whole series of tier 2 names that just really don't need to be around. And we said they should go the consolidation route. The merger of equals is the path for them. There's a subset that these tier 1 core names that will do just fine. Just got to get through this period of kind of sloppiness and
who are they?
Easiness. Yeah, so the 3 that we absolutely love, the core Permian guys or Bakken players are right up there. Parsley Energy is one that's just still trading very, very cheap, 4.5 times next year's EV to EBITDA. WPX, almost a very similar company with great positions, 2 of the best positions in 2 of the best basins, the Bakken and the Permian. And then another company
is Brigham Minerals.
MNRL is actually
the ticker there. Mike,
yes.
Unfortunately, we got to leave it there. We had some breaking news earlier in the show. Parsley, WPX, and Brigham Minerals. Mike Kelly, we appreciate you coming on Seaport Global. Mike, we'll see you soon. Thank you.
Yeah, thanks, Brian.
Thank you.
Check Please is next.
Look. Only one thing's more exciting than getting Alexa.
Once in a while, a movie comes along that leaves critics and audiences breathless. That movie is Le Mans 66.
We're gonna beat Ferrari with a Ford.
Are you nuts?
Starring Academy Award winners Matt Damon and Christian Bale.
They hate guys like us because we're different.
Don't miss the incredible true story of Ford v Ferrari.
Trust me.
It's one of the year's must-see films. It's sensational, a triumph.
Together, we're gonna make history.
Le Mans 66.
You're gonna want to see this.
In cinemas and IMAX now.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe it. Now that's big on quality and always Lidl on price. Subject to availability, selected stores, excludes an eye.
On 3, our unlimited data is actually unlimited, like 4 reels. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
Haskell gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep 3 is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Check, please.
Okay, so Chobani, the famous yogurt company, they want to create something called oat milk, which is apparently water and oats mixed. Doesn't sound very milky, but apparently it's a thing.
And they want to make yogurt out of that oat milk.
Oat milk yogurt.
Because oats don't lactate. Thanks for watching Power Lunch.
Closing bell right now.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost. I'm here at the Snap Post today. That stock soaring 5% today. It's up 150% year to date. Coming up, we've got exclusive comments from the CEO and founder, Evan Spiegel. The broader markets higher, only slightly, 30 points or so on the Dow, but anything positive is another record all-time closing high with 59 minutes left in the session.
And I'm Morgan Brennan in for Sarah Eisen. Let's look at what's driving the action today. The mood in Beijing about a possible trade deal with the U.S. has turned pessimistic. A source tells CNBC that trade uncertainty weighing on oil prices and bond yields today. And new data showed homebuilder confidence ticking lower in November, though still largely positive. Joining us for the hour is Mark Tepper from Strategic Wealth Partners. Mark, welcome.
Thanks for having me.
Even as I just went through those different points that are driving the action today, we've got records again for the Dow and the S&P, albeit just barely.
Right, yes. I mean, all investors are pretty much still risk on. And what's most surprising to me is that you have this news coming out of China where China's potentially balking at a trade deal, but we're right at a new all-time high, right? So the narrative of the market has really shifted from one of economic deflation to one of policy reflation, and that's typically good for stocks, right? So a low inflation, slower growth economy is good for stocks. Over the next 6 to 9 months, it now would not be a good time to be underweight equities. You want to be in equities right now.
Phase one trade deal priced into this market?
I think completely, almost fully priced in right now. I mean, we've seen quite the run-up over the course of the last couple of months. I would think if you do not get a trade deal, the market's going to drop at least 10%.
Lots to talk about with Mark over the next hour, but let's focus in on the big stories we're watching today. Eunice Yun is covering the new China trade details from Beijing. Mike Santoli has his market dashboard, and Julia Boston has some of the highlights from her interview from Snap CEO Evan Spiegel earlier today. But Eunice, good to see you. Let's start with you.
Thanks so much, Wilf. Well, sentiment appears to have turned pessimistic in Beijing, that a deal can be reached at least this year. A government source familiar with the trade talks told me that people were troubled after President Trump said about a week ago that there was no agreement on phasing out tariffs. That was a very important point for Beijing. He said that the Chinese side felt that there was an agreement, at least in principle. Now, people here are also unclear of President Trump's standing because of the possible impeachment, as well as an election just a year away. So he said that the strategy now is to continue to negotiate, that China, in theory, does want to have some sort of trade deal if it works for them, but that the focus needs to be more on propping up the domestic economy. Wolf?
Eunice, does China need to see the tariffs roll back before they sign any piece of paper, whether it's just phase one or more?
Yes. I've heard now from a couple of different people that the tariffs need to be rolled back, or at least that there has to be some movement on the tariffs, because the way it was explained to me is that from the Chinese perspective, this trade war began with tariffs and needs to end with a rollback of tariffs.
Eunice, just one quick pivoting question. Is President Xi Jinping under pressure because of what's going on in Hong Kong? Clearly, we see a lot of escalating coverage of that over here, but is his own power position in Beijing somewhat insulated, or is he under pressure because of it?
Well, I think that he's under pressure maybe from the international community because there have been so many in the U.S. and the U.K. who've been outspoken. But in terms of whether or not he's going to give in to that pressure, that looks very unlikely because Beijing feels strongly that Hong Kong is a part of China and that no one outside of Hong Kong or China should be, from China's perspective, meddling in their internal affairs.
Eunice, thanks so much. Great to see you live, 4 a.m. it is in Beijing. Thanks for joining us.
Working around the clock. Let's send it over to Mike Santoli for today's market dashboard. Mike.
Morgan, thank you very much. On the dashboard today, first, untrodden ground. That's where this market continues to walk right now. We'll try to suggest how long that can last in record territory. Then undisrupted champions. This is a handful of elite consumer stocks that the market has really embraced right now. Unafraid for now, investor sentiment, a lot less scared than it was not that long ago. See if that's a good or bad thing. And then underestimated no more. That's been the economic numbers are no longer being underestimated by economists. So untrodden ground. Look at a one-year chart of the S&P 500 just to see where we've come from. It's actually kind of tidy right now because we're just before we kind of fell off that cliff last December. So it gives you a relatively clean before and after of this trend. I'm going to attempt to draw a trend line here. That's the upper trend line right there. And then the lower one would be something like this. Okay, so that's kind of the channel we've been traveling in right now. If you look at the upper end of this lane, this is where you've seen a couple of times where you've had major pullbacks when you kind of bumped up against that rail. Of course, this is sort of something that it's evolving all the time. There was no